if you look at the graphs of various countries, India is not dipping. Many countries like South Korea ka graph dekhenge na, so it is like, come down completely. Yeah. But India is still a climbing graph.
Yeah.
So
sir, we'll be peaking somewhere in June, sir.
It is not only that it is increasing, but the rate of increase is also not slowing down.
Sorry to interrupt. Let us, I think we can start this
let's
session.
start. Yeah.
Let's start this session. I know this discussion on the coronavirus is basically all are endless. A very good morning to all. I heartily welcome to audience for this session at 11 and to our revered speakers, SP Tulsian sir and Shankar Sharma sir, two best of the men from the stock market are here with us today. ACA is privileged to host you, sir, today. So we would like to inform you that ACAE, Association of Corporate Advisor, is the body of professional chartered accountant advocates and professionals. And during the last 37 days, we have done almost 50 online sessions on varied topic, and speakers from all over the country have joined our session and deliberated on the varied subject. Friends, our past videos are also available in the Facebook and YouTube, the details of which would be posted in the chat box, wherein you can go and view all our videos. And yes, one more initiative which ACA has done during this lockdown period was that coming up with the e-bulletin, which contains all the notification and circular which has been issued by any ministry under any law. So those links also will be posted in the chat box. Please do visit the link and feel free to share with all your contacts. Now we come to the today's session, for which we are eagerly waited. Friends, as with the trajectory of the COVID-19 infection in India is getting steeper, and yes, we are also believing that the lockdown will definitely have a positive result. I mean, without the lockdown, the number could have been much higher. And stock market has seen lots of roller coaster in last 40 days. And I am not a stock guy, but yes, following shortly, I have seen many ups and downs in the stock market. There are many questions in the minds of investors that maybe all the stocks are now at their actual value, with exception of some stock like FMCG. Whether investors should accumulate stock at this point of time, seeing the strong balance sheet and the credential, or wait till further time, or maybe we can go back to the basic and pick up the stock based on the fundamentals of the company. All these questions are hovering around, and yes, let us not waste further time and hear this from two stalwart, and I would say the best men which the stock market can have, and they are here with us today. So Vikas, we are over to you so that we can start this session. Thank you.
Yeah, good morning and thank you, President. Thank you for inviting me to coordinate this session, a subject which is very, very dear to my heart. So good morning, members of ACAE, guests and dear participants. Our distinguished panelists, Mr. SP Tulsian and Mr. Shankar Sharma. Thank you everyone for participating this morning on a very, very relevant and a contemporary subject, capital market, the road ahead. This indeed is very, very relevant in the present day context. And friends, we'll frame the session in such a way that we'll have a lot of question and answer sessions too. But at the outset, let me proceed on to introduce our panelists very briefly. Work hard, do good, and lead a modest, simple life. That's the philosophy of Mr. SP Tulsian, a staunch karma yogi. He is a name to reckon with in the Indian investors fraternity. He is the editor and CEO of sptulsian.com, professionally qualified chartered accountant and a company secretary. Mr. Tulsian is a much sought after fundamental analyst today. His quotes on sectors such as sugar, cement, oil and gas, regulatory policies are very well received by the investors fraternity at large. He contributes regularly to professional bodies, chambers of commerce, trade bodies, and various financial dailies and channels in media too. Friends, I present Mr. SP Tulsian and welcome him on board. Our next panelist, dear friends, is an MBA grad and has been an investment banker at Citibank. He set up his outfit First Global, and true to its name, the company started operating internationally since 1999. Mr. Shankar Sharma heads the global strategy of his company and built its research coverage of global companies and economies across the globe. First Global's take on major calls on very important aspects has been for over 2 decades, has been very enterprising and promising. Mr. Shankar Sharma has been quoted on Wall Street Journal, CNBC, other media and news channel. He has been a guest speaker on numerous finance and capital market programs across the globe, and he has been fondly called the alchemist of the Lal Street by the Forbes magazine. So welcome on board, Mr. Shankar Sharma. Friends, to commence the proceedings, there are a lot of questions, a lot of issues on hand, but instead of introducing those issues right now, let me first request Mr. S.P. Tulsian to commence his deliberation. The floor is yours, sir.
Thank you, Vikasji, and thank you, Jitendraji. And nice to participate with Shankar in this forum. Now, this topic for today's discussion is capital market, the road ahead. And if I go by the situations, which we have seen, though this is a unprecedented situation we all have been facing, I don't think that anyone has seen this kind of situation even in last 1 century. So difficult to take a call, but whenever we have this type of unusual kind of situation, we need to take the unusual steps as well. Now, if I just take the situation for this last couple of months, or maybe from middle of March, we have seen the market sentiments, in fact, sentiments changes so fast that we get so bullish and so jubilant and changes our view just in overnight or maybe in a couple of days. And the case in point is the April series. On 30th April, we have seen, or in fact, maybe if I just start the week beginning 27th April, 27, 28, 29, 30th, in 4 days, I don't think that any situation has really changed in this last 4 days, but on the COVID front, because everyone is talking now of this pandemic, which has gripped the entire world, including India. So I don't think that any situation has really seen having improved on the medical front, or maybe on the cure having found out for this pandemic. But the market, as I said, on 27, 28, 29, 30th, I'm just focusing on these 4 days. The Nifty has risen by about 700 points, and the Bank Nifty has risen by about 2,000 points. I don't think that anybody had taken that kind of bullish call at that point of time. So my point is that, going by the market terminology, or maybe by the sentiments in fact drives the market very fast, and the overbought position and oversold positions are we always talk. I am, as a fundamental analyst, I don't have much expertise on the technical analysis, and I don't rely much on the technical analysis as well. But being a chartered accountant and chartered secretary, and my experience of over 4 decades in the capital market, I've always relied on the fundamental analysis. But if I just go on the technical terms, I always say that the oversold market is seen to be the most bullish factor, and overbought market is seen to be the most bearish factor. And thirdly, I always say that speculation can really destroy the fundamentals, come what may, of any market, whether it is commodity market, or it is of the equity market, or of any other this thing. In fact, in case of crude, we have seen on the day, about a couple of weeks back, on the day of settlement, how the prices went into negative, and that was bizarre to take that kind of call, because that has to do with the settlement happening on a particular day. But this is how you see the speculation, destroying the valuations and taking the toll on the fundamentals of any, whether stocks, company, or commodity. So my point is that yes, on 30th April, we have seen, as I said, that in 4 days, the Nifty has risen by 700 points, Bank Nifty has risen by about 2,000 points. What has changed between the 30th May to 3rd May, or tomorrow, when we will be seeing opening of the market? If I just go on the micro and macro both, if I first go on the domestic factor, we have seen the HUL coming out with bad numbers. Reliance Industries, going for the very aggressive pricing of the rights issue at 1257, or maybe the poor performance of the automobile sales, though it was expected. But again, very strange to see, even on Thursday, the expiry day, if you see Maruti, TVS Motor, Hero Moto, or any other automobile stocks, Ashok Leyland, Mahindra, where they were all ruling very high, and sometimes If you take a fundamental call, probably you may get amused that probably all these companies may be coming out with a bumper monthly sales numbers, which I don't think that even the most optimistic person must have thought that anybody will be reporting anything but the zero sales number on the domestic market. And that is how it has exactly happened. Whether you take a call on any company, they have not shown any kind of performance. So my point is that yes, the technical factors, because it was the oversold market, and that has made the stocks to rise so high. And now if we see the situation, the May series will be starting from tomorrow, that is 3rd May, sorry, 4th May. And people are already, getting shiver in their spine that SGX Nifty is seen to be down by about 600 points. So my point is that yes, if the market can rise by 700 points in 4 days, and Bank Nifty can rise by 2000 points in 4 days, it can also fall by equal pace, maybe in half of those days what we have seen. But that does not mean that there is that the end of the road, or there is no light at the end of the tunnel, because we are discussing on a capital market road ahead. So my point is that yes, you need to be. I've always been talking to the investors, not to the traders, because my forte and my expertise more has been on building the portfolio and creating the wealth by the long term, or maybe the long term methods, and remaining as an investor. So if on that basis, if I just take a call, probably I always tell the people, those who have, because this is what I tell on the channel also, CNBC, when I appear daily in the afternoon show, that look to buy the stocks of quality stocks when they are at its lowest, or when the things are all, or when you see blood on the street. But do we do that? Are we really following those kind of standard methodology or standard advice given to us? And I think that no, it is not so. So yes, the situation is that we'll be seeing the steep correction coming in the first 2 or 3 days of this May series. And generally, if you go by whatever experience I have of the last 2 decades, which I've seen post this online trading having started in this last 25 years, May and October are always seen to be the relatively the weaker months. I'm not going by the data points or the historical data only, but there are generally many data supporting that yes, things are seen to be dull during that point of time, because of the quarterly results, because of the yearly results coming in, because of the other many factors, and probably taking that cue also. In fact, on Thursday also we have said that probably May requires a big caution, and I don't think that the kind of rise which we have seen in these last 4 days was anything to do with the fundamentals. It was more to do with the technicals. But yes, coming on the road ahead, capital market road ahead, I think this is the best time to build the portfolio. But question comes at what price, at what point one should enter. Now, if I just take a call on the HUL kind of stocks, take the case of HUL. Company came out with very poor numbers, or I would say that disappointing numbers. I won't say poor numbers, but if you see the effect of 15 days in the month of March, the company has all companies across the India have done quite well till middle of March, because 15th March till 15th March there was no issues involved, or no hassles at all. But in the last 15 days, they've seen the things taking a lot of hit. Practically lockdown from 23rd March across the country, and that has seen hampering the growth of the top line as well as bottom line. Or in fact, I would say that there has been degrowth. And if I just again go by the historical data points, and which I corroborate with the sentiments of the investors and of the people, when Hindustan Unilever moved to a price of 26, I'm just giving this some of the data points to give a clear-cut roadmap on the investments philosophy to be followed going ahead. That about couple of weeks back, when Hindustan Unilever moved to a level of 2600, which was practically its lifetime high. And my question at that time also was that, does it justify this kind of valuations? Because you were only looking for the hiding space and seen that to be as at most defensive. But I think that people made a lot of mistakes. Now, if I go by the HUL share price, on Thursday, if I'm not wrong, it closed at around 2250. I won't be surprised to see the share price falling below 2000 rupees, and probably that may be a good entry point. I don't think that one should really look to buy the stock at the bottom and look to sell the stock at top. That is just more a kind of what you call mental satisfaction, or just to satisfy your ego that you have entered into the stock at the lowest and sold into the stock at the highest, which no even prudent investor or no even an expert can do that. So my point is that yes, the May series probably will be, or May month, I won't go it by the May series because the F&O has started from the 4th May. But practically the May month probably will be the best time to start accumulation of the quality stocks again. And going by the general advice, which I always give to all the people, that if you are an investor, because I largely cater to the professionals, I being a chartered accountant, and I cater to the, or I advise, I have my friends amongst the chartered accountant community, advocate, lawyer community, and the company secretary community people, professionals. So I always say that because these professionals generally, they make their money every month and they look for the avenues to make investments or to park their savings in a sustainable, which can give a sustainable return. So equity has always found to be the best asset class, if you really ask me. Sometimes people take a call on the real estate, but real estate fate, we have all been known for the last 2 or 3 years that what a kind of negative returns that has been given, and no exit route be seen available. But I'm not saying that one should write off the real estate. In fact, I tell that real estate should more be as a need based. If you are living in your rental apartment or your rental house, you should look to buy the ownership apartment. And if you are operating from a leased office premises, look to buy the office premises of your own. So that will also be forming as part of your savings, which can be partly considered as an investment. But yes, the equity is the best asset class for making for the professionals to park their surplus money, because professionals keep earning every month their money and they need to park it. So my point is that probably because those who have missed the bus to make investments in fact, if I just tell you, on Thursday, on Wednesday and Thursday, in fact, I got so many calls from my members on my portal where I advise them on the real-time basis that they were all keen to buy the shares like HDFC Twins, HUL, or maybe stocks like Reliance Industries, or maybe the Maruti, Hero Motor. And I always, I've advised, in fact, for last 3-4 days that this is not the time to make investments, because expiry is the key factor. Allow the markets to cool off, allow it to get corrected by maybe about 8 to 10%, and probably you will see the fate of those leading stocks I'm talking of. If I just go in the Bank Nifty, if you see the Bank Nifty, of 12 stocks in the Bank Nifty, 6 or 7 are seen to be active, 5 or 6 stocks are not seen to be very active. But if I just take call on for making investments by the prospective investor in these stocks, I would say that allow HDFC Bank and ICICI Bank to correct by about 8 to 10% from the Thursday's closing. And in case of Kotak Bank, Axis Bank, SBI, IndusInd Bank, Bandhan Bank, they all can correct by 15% as well. So let's not be in haste to buy the stocks. In fact, if you are an investor and if you are looking to park your surplus money, there should always be a fundamental and valuation call that at what price one should enter. If you keep chasing the momentum, I don't think that one can really make money in the stock market. They will be seen lending up, ultimately buying at a higher price and selling them at a lower price. So just to give an example that yes, May probably will be the best time to make investments. Some people ask me that what should be the ideal level, or what should be the support level, or what should be the resistance level of the Nifty. I say that we are not playing in the Nifty. You can't make investment in the Nifty because Nifty is more for the index funds or that kind of funds. But I've not seen any investor going by making investment into the Nifty stocks, and even that is not advised also. Because if you take a call on the 50 Nifty stocks, out of 50, 30 to 35 are seen to be dormant or not active at all, or maybe giving negative returns, but you only focus on 10 to 15 for frontline Nifty stocks, which are ideal for making investments in your portfolio. So coming specifically on the bank stocks, I've already touched upon that 5 or 6 banks which deserves to be bought at or need to be having in your portfolio. But the levels which are just ballpark, though no one can give the exact indications, because in the first 2 days of this May series will be seen quite scary. I won't be surprised to see the Nifty falling by, because whatever gain which we have seen having earned in 4 days will get wiped off in maybe in the next 2 days. Similar may be the case with Bank Nifty, and wait for the market to buy them again once that kind of correction having taken place. Don't look to fall those stocks further, because as I said that no one can catch the bottom and no one can buy the stock at the lowest level. So if you are looking to buy HDFC Bank and ICICI Bank and even Axis Bank and even SBI, I would put 4 banks in that category. If they correct by 8 to 10%, go and buy them, maybe in a staggered manner, but I don't think that one should look to wait for further fall on those stocks. If I take a call on the other set of stocks from the Bank Nifty, maybe like Kotak Bank, Bandhan Bank, or maybe RBL Bank, or maybe IndusInd Bank, they have the chances of falling more, maybe by 15% as well in the near term, in the next 2 to 3 days. So this is how one should take a call of making investments. Now, if I just go by this is just one example of the behavior which we have seen in these last 4 days and how dramatic the sentiments got changed in these last 2 days. I've given an example. Now, if I go by the investment pattern, I always say that the asset class is very important, or the allocation of the stock market equity investment is very important. And I always advise that one should not put more than 25% of your investable fund into the stock market, either in one group or in one sector. Just to give an example, suppose if you have opted to choose the HDFC group, in fact, I have been blindly recommending HDFC group stocks maybe for the last 2 decades, that whenever you have any crisis in coming in, just go and buy and grab this HDFC group of stocks. Where presently, the earlier this group used to have only 2 stocks, that is HDFC and HDFC Bank, maybe about 10-12 years back. But now they have 4 stocks available in that from the HDFC stable: HDFC Limited, HDFC Bank, and HDFC Life, and HDFC AMC. And in fact, all 4 qualifies to be the stocks for investment, maybe from portfolio point of view, from long-term point of view. But as a caveat, as I have said, that don't put more than 25% in any one sector or 25% in any one group. Now, again, in that category, we have a subdivision that we don't advise to put more than 12% in any one stock. Take, for instance, if you have chosen to go for all out for HDFC group, I will advise that it should not exceed 25% of your holding put together in all 4 stocks, that is HDFC Limited, HDFC Bank, HDFC AMC, and HDFC Life. Now, if I've chosen to invest 12% in HDFC Limited, which is in fact the flagship company, plus having their own housing finance company, and they are having the controlling interest in the other 3 companies, probably I would say that it should not exceed 12% in any one stock, because again, under the 25% category, there is a subcategory of 12% making investment into the one stock or maybe one company. So remaining 12% should only get distributed amongst the other 3 stocks. But suppose, take for instance, if you are too bullish on the bank and financials, and you have chosen 12% for HDFC Limited and 12% for HDFC Bank, probably you just have a room of 1% making investments into the other 2 stocks. One should not get too gung-ho on any one particular sector or one particular group. And in fact, this is the advice which I have been giving maybe for the last 10 to 15 years, while we follow this kind of pattern while advising our members as well as in our PMS schemes as well. Now, if I just go by the index allocation, I don't have the data points exactly available with me with the time horizon, but at one point of time, Nifty, if I'm not wrong, about in the last 12 months, at one point of time, Nifty had a weightage of more than 40% in the banks and financials, which was bizarre, because you are already in many of the funds I've seen, maybe PMSs or maybe the mutual funds have taken the overweight. I'm not talking the dedicated mutual funds, those who had the banking and finance as their theme fund, but the general, the growth funds, or maybe the general funds, they have taken overweight on bank and financials to the extent of 45 to 55% of their portfolio. In fact, this kind of experience has been noticed in case of Bajaj Finance, where I don't want to name the mutual fund, I don't want to name the PMSs, 3 or 4 PMSs I know. When they started with the investment in Bajaj Finance, at one point of time, they restricted or kept to the discipline of making 15% or 20% investment in one stock or one sector. And the weight of Bajaj Finance alone has increased to about 60% in that PMS. And we have seen now Bajaj Finance has corrected by about 60% in this last maybe 2.5 months. We have seen the fate of those PMSs also, taking a huge dip, disproportionate to the fall in the market. So, though all these allocations, all these guidelines may sound to be very, very immature or very, very what you call general, but I've seen the seasoned investors making these big mistakes. I don't want to name here. And in fact, this I've said on TV also, that 45 HNIs are holding over 2.5 lakh shares each in Bajaj Finance. So if you see this kind of concentrated holding, that indicates that I don't think that at one point of time, this 2.5 lakh shares had a value of 120 crore. I agree that the HNIs have a portfolio of 1,000 crore, 1,500 crore also. But I don't think that individual HNI must be having a portfolio of more than 500 crores. Maybe he may be having a portfolio in name of his wife, son, HUF, children, and other family members, or maybe body corporate. But if I'm saying 45 individuals who are seen to be holding 2.5 lakh shares, each one of them, you can understand the concentration of because we get too greedy and too fearful. In case of the Bajaj Finance having risen continuously in this last couple of years, and the people got a consistent return of more than 35 to 40% per year, they just extrapolated the present kind of returns and they burned their fingers. They made a big mistake of losing now of about 60% loss in this last less than, or maybe in the less than 3 months. So these are just the example, just the data point I'm trying to share, that though it looks to be very amateur, very easy, very simple, but we don't profess, we don't follow them, we don't in fact profess them while making investment into the stock market. So yes, the 25% should be restricted in each sector and in each group. Now 25% should not even exceed in case of banks and financials also. Now, if I go ahead and take a call, that I always say that never take commodity stocks as your long-term portfolio stocks in any this one, whether you have an aggressive profile or you have a balanced profile or you have a conservative investors profile, because commodity stocks can never form part of your portfolio. I have always been taking the bullish call at the relevant point of time, maybe in cement, maybe in sugar, maybe in steel, but they have never been advised by me as a portfolio stocks. So if you take a call on the 25% restriction into one sector, then you are left probably with the sectors which are seen to be evergreen and which can be taken always as an investment bet in your portfolio. And they are, first is FMCG, second is bank and financial, and third is IT. In fact, I have placed the banks and financial in the second category because of the NCLT having evolved, the asset quality issues and all those things. The preference and the allocations and the priority of these sectors keep changing. But right now we have our priority more on FMCG, bank and financials, and IT. In fact, these three can, you can, if you can afford to have the concentrated portfolio, you can afford to have 25% allocation to all these three. And maybe fourth, people nowadays have been talking of pharma. But pharma, again, we say that there is a very peculiar situation prevailing. In fact, we do not know that which are the pharma companies are sourcing their API from China, or which are the pioneer in making their own APIs and exporting to the world market. So the later ones, maybe like Divi's Lab, who have the pioneer of inventing or making the APIs at the least cost and catering to the developed market, are seen to be the preferred bet. So there is no point in taking a general call. And even in the current situation, when this all medical crisis is seen prevailing, I don't think that one should go overweight on pharma sectors, and should even increase their allocation to 25%. In fact, in pharma, I don't think that it should be more than 10% of your present equity portfolio. And coming on the capital, on the company size, which we call it as a large cap, mid cap, small cap, and micro cap. My again advice is that you should not have less than 60% of your portfolio in large cap, 20% in mid cap, 10% in micro cap and small cap, and 10% should be the cash and bank balances should be available to you at all point of time. And lastly, as a prudent investor, in fact, this is I'm giving all these my actual experience, my actual practice, which I've professed in the stock market in this last 4 decades, that I never hold more than 4 stocks in my portfolio purely from a long-term point of view. And I don't have more than 16 to 20 stocks in my portfolio, because many people ask you that what has been your investment philosophy. So I always say that I've never had at any point of time more than 16 to 20 stocks in my portfolio, not more than 4 stocks from a long-term point of view. My point is that even on a long-term stocks, like, because the olden days have gone when we used to buy the stocks like Century Textile or maybe Hindustan Unilever, Colgate, Palmolive, Asian Paints, and we used to forget and just invest and forget those stocks. Because if you take a call, as I've said, Hindustan Unilever, a couple of weeks back, it was at 2,600. We may find the stock to be at 2,000 rupees, maybe in the next 2 weeks. As such, it is now ruling at 2,200. So it has already seen a fall of about 15% in this last couple of weeks. So keep booking profits on every rise, and even if you have lost an opportunity to buy them again at a lower level, don't need to regret. In fact, I tell people, maybe the 2 or 3 stocks which I'm referring to in my portfolio, I have only taken an exposure of a long term, or maybe with a view of more than 5 years in one stock, that is HDFC Limited. Because looking to the broad spectrum of the financial services they are into, whether they are into the banks, housing finance company, NBFCs, asset management, insurance, I have just taken a long position as an investor in HDFC Limited. When I'm saying long position, I don't mean F&O position. So my point is that yes, keep booking profits in all your long-term stocks also, because if you plot the range of any stock or over a period of time, maybe a couple of months, maybe 3 months, maybe 4 months, maybe 6 months, you will find them moving in a range. Even if you draw a new range post-March, you will find that probably the 24th March level, which we have seen of many of these frontliners as the 52-week low, may not be able to be seen again by us in the month of May or in the month of coming or in the coming months as well, whether we talk in the month of May, June, July. So the lows of 24th March, just for purposes of identification and analysis, if we take the 24th March as the low for the frontliners, those are just seen to be more academic. So if you want to be a realistic investor, maybe add 10 to 15% into this 52-week theoretical low, which we have seen in case of the frontliners. So 60% of your investable equity fund should be in frontliners, 20% should be in mid cap, 10% in the small and micro, and 10% should be the cash. Now, coming specifically for the investors, I always caution them that never leverage your portfolio or never indulge into the F&O, future and options, because future and options is a totally different ball game. If you make money, you have the chances of losing money also, and the chances, the probability of losing money are 90%. Probability of making money is 10%. In fact, let me tell you that I was an NSE member also since its inception till 2007, when I voluntarily surrendered my membership. And I have, at that time, I was not catering to my many of these reputed HNI clients also for F&O. And that time they have told me that we will shift our broking if you don't allow us to do the F&O. And I say you can sweetly shift to any other broker. And after losing money for a couple of years, they moved back to me and said that yes, we had a very what you call expensive experience of losing money, and now we just want to restrict into the cash investment only. And let me tell you, in my whole life of 45 years into the stock market, I have never indulged into the F&O for the matter of leveraging. Yes, I do use F&O for the purposes of hedging, or maybe for purposes of maybe buying my stocks. In fact, this kind of advice I give many times on the CNBC also. And when the April series started, at that time the HDFC Limited was ruling at around 1580. And I've said on the channel that why don't, instead of buying at HDFC Limited at 1580, I won't buy HDFC Limited at 1580. Rather, I will write the 1500 option, which was ruling at that point of time at 105 rupees, that I will write the option of 1500 rupees. If the share prices falls to below 1400, I will take the delivery with my effective cost being 1400 rupees. And I will be very happy to have HDFC Limited in my portfolio as an investor at a price of 1400. So my point is that I'm using the F&O future and options only for purposes of hedging. If I want to see that maybe the share prices may fall, I may sell it for a couple of days against my cash holding in the future. Or if I wish to buy, I generally write the options. Or if I have the delivery, I sell the equivalent quantity of the calls into the options. This is how I do. So never use this F&O for your against or against your what you call for leveraging your portfolio, and it should only be as a hedging against your portfolio. So these are the few tips which I feel that this is a time to make good investments. The situation on the present, this crisis, medical crisis called pandemic, I don't think that anyone has any clarity. In fact, I was talking to Shankar in the break. He was saying that probably we may not see the vaccine by year end also, and the side effect of vaccine are seen to be very severe. And I fully agree, because if you hear Bill Gates have been saying that I have developed the vaccine, but I want the immunity from the world, because he claims to have tested the vaccine in Africa, and he wants the immunity that he should not be held responsible if vaccine doesn't work, and he's prepared to give that vaccine to the whole world. The Bill Gates, who is running the foundation, who is very active in the medical field also. So I'm not an expert into the medical aspect, but let me tell you this situation, though we have seen the very critical situations even in the past also, it reminds me of the 1997 Asia financial crisis and 2008 subprime crisis. I'm not saying that some people say that this is much more the crisis of what we have seen in those two crises earlier in 97 and 2008. Probably they may be right, but we have seen the fall of Nifty or maybe the benchmark indices at that point of time also by about 60% and having bounced back by equal pace maybe in the next 12 months. So it is just difficult to take a call on the timeline, how long it may take. It may take maybe 3 months, 4 months, 6 months, but you are not going to see the continuous. In fact, many people, I've seen them using the word that this is a bear market rally. I don't understand this bear market rally and bull market rally. If I'm looking as an investor, if I can buy the stock at a particular level and if I get 10 to 15% return in about a couple of months, I coolly go and book the gains as well, because I have ample number of ideas. As I said, if I'm bullish on automobile, you have about 10 to 15 stocks available in that category. If I'm bullish on the bank and financial, I have 50 stocks available in that category. If I'm bullish on IT, I have about 10 stocks available. I'm talking the quality. I'm not talking the entire sector, available in that space. Probably the paint is the only sector where only 4 or 5 companies are available. So that's the reasons I have been keeping the Asian Paints and HDFC as a long-term portfolio call, where I can afford to take my view on a sustainable basis for the next 5 years without touching them, or if I loosely call them, by marrying those 2 shares, HDFC Limited and Asian Paints. So yes, my point is that this is a time to make investments, and those, more especially those, probably if you would have held this seminar last Saturday, last Sunday, people would have got trapped by buying the share at high level. But I think that this weakness which we are going to see, Nifty is going to fall by maybe about, as I said, 700 points in this week beginning Monday, and Bank Nifty by about 2,000 points. I won't be surprised. But let's not get too upset or too perplexed or too confused with this. Use this fall as an opportunity to add your portfolio. And even if after buying the shares at a certain level, if it has fallen further by about 8 to 10% or 5 to 10%, there is no need to average, but look to broad base the portfolio, and let's not take a short-term view, because the weakness of the in the stocks are not going to remain continuous for the next 2 or 3 months, because you will be seeing the bump up or maybe rally or bounce back scene coming back as well. The best case in point is the automobile stocks, which I've just given an example that on the 1st May we were about to see the sales numbers which were expected to be nil, and in spite of that, on the day prior to that, we are seeing all the automobile stocks rising up by 7 to 8%. So I think this is the theme. This is the philosophy. I, as a fundamental analyst, I always take in the market and keep booking profits, because this is the best time to look for the optimum returns, which is in today's time should be about 15% on an annual basis. Because when you have the 10-year government bond yield of about 7%, 15% should be looked into as your normal return, which you can easily keep making money in the next 12 months or so in the times of uncertainty. And in the times of uncertainty, you have to be nimble-footed. You must be able to quickly come in and quickly get out. If you just keep waiting, probably you will see the markets going up by 10%, 15% just in maybe a couple of days or maybe a couple of weeks as well. So with this theme, I think investments is the right word for making equity investments as the base with the road ahead for the next maybe 3 to 6 months. Thank you.
Thank you very much, Mr. Tulsian. I must, on behalf of ACE, congratulate you for the brilliant discourse, and you've used the entire 40 minutes of your allotted time frame to beautifully translate the present happenings in the capital market. In the process, you have given certain do's and don'ts for the investor fraternity at large. We are very, very grateful. And your take on so many sectors. I mean, there were so many questions that I was seeing in the chat box, but you very aptly answered those calls. And sir, couple of, before I open the floor for the Q&A, just a couple of take for your view. Would you recommend a mix of some debt to equity as well in the investment criterion, or it should be confined to equity itself? Because you mentioned equity is the best asset class. So your take on, let's say, debt, or say gold, or say alternate investment fund, any of these things, I mean, would you like to have something in your kitty, or you would go straight with equity itself?
See, if you go by the, if I just knock off this last 2 years, debt has always attracted that debt has never been a tax-proof investments. Equity, if you recall, we all are chartered accountants. Couple of years back, equity investments on a long-term basis used to be totally tax-free. And even the short-term capital gain at one point of time used to attract 10% tax and 15% tax. And if you go by the yardstick or maybe the data points of the returns having earned in the equity market, that has always been almost 100% of the debt return. If the benchmark yield or if the the 10-year bond yield have been at about X percentage, the equity has always given X into 2%. So I have never advised going for any kind of investment into the debt instruments, but I strongly advise everyone that every year one should go for the PPF kind of investments of 1.5 lakh rupees each. Now take me in case of my this one, if I have my family member, me and my wife and my HUF, even if I knock off my major sons and my daughter-in-laws and all those things, I religiously go and nowadays for last couple of years HUF are also disqualified, but I make a point to invest 1.5 lakh rupees every year into the PPFs from in the first week of April, not in the last week of March, because so as to have some kind of balancing. And even if I'm doing some kind of investments, maybe bank FD has only been taken, because if you take the present scenario, though the present situation has happened now, but if you go by any asset management company, they have 50% in the debt, 50% in equity. Their overall AUM, asset under management, to them. But you have seen the fate of the debt management, debt mutual funds. What has been the fate? Franklin have recently closed 6 mutual funds. Prior to that, we had the Z exposure. Prior to that, we had ILFS. Prior to that, we have so many skeletons are seen feared for many other groups. So I don't think that the debt mutual funds have been really managed well by all these fund managers. I'm very unhappy and very critical of the fund managers, those who have invested. In fact, I don't see any difference into the debt mutual funds and the PSU lending pattern to be anything different. The only difference is that in case of debt mutual funds, fund managers have got a hefty pay packet, while in case of PSU banks, they got a very meager salary. So I never advise, and I will never advise to go for the debt mutual funds. If you want to, then go for the bank fixed deposit. That is the safest one, or need-based making investments. At some time in the past, we had the infrastructure bond, tax-free bonds. I've opted for those things. So except for the need-based things, I will never advise to go for the debt mutual funds. Coming on the gold investments, gold should be, being a Marwadi, and we all know, being a Indian culture, we always have about 8 to 10% of our savings invested in the gold, either as a form of compulsion or as a form of choice. Maybe when we marry our children, or when we have any kind of ceremony or any kind of functions in our family, we are forced to buy the gold and diamond jewelry. So I think that forms about 6 to 8% of your wealth. And I will say that let it remain as a need-based investment only, because there is no point in buying the jewelry. If you are buying the jewelry and if you make those conversion of those jewelry 3 times, practically you have lost the entire value of the gold. So, and nobody makes investment into the raw gold, raw silver, or raw diamond. So again, in jewelry or in the gold and silver, it should not be more than 6 to 8%, and that to need-based. Yeah.
Right. Thank you, sir. So, just one quick recap from your side on, a very, very pertinent issue relating to the fiscal deficit or the fiscal stimulus, what our government is presently contemplating or, running upon. So just your quick word on this as well.
See, I think the government, if I just come on the fiscal stimulus given of $2.5 trillion by US, and the kind of amount which they've just exhausted in 2 weeks' time, and now the US government is contemplating of coming out with another $2 trillion package. We don't have that kind of merry and the luxury at our end in India. And definitely, I think the government has been coming out with the required packages in a calibrated manner. Now, if you see the TLTRO or maybe the RBI having given the facility for the NBFCs and for many other companies, whenever talking to the banks and all that, you get to know that the banks are not eager to avail those facilities. And in fact, 6 to 7 lakh crore is seen as parked with the Reserve Bank of India in the form of the reverse repo. When the reverse repo rate was cut by 50 basis point again and 25 basis point on the repo rate, I in fact indicated my view that I would have been happy if the reverse repo rate would have cut by 75 basis points, because that probably would have compelled the bankers to go and lend the money more. But yes, the stimulus, whatever seen having given by the Indian government, has all been seen to be coming in a gradual manner and in a calibrated manner. And I don't think that that's an end of it. People may argue that yes, this is seen to be very, 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 very small or very peanut, they need 2 lakh crore, they need 10 lakh crore, they need 50 lakh crore, each state is demanding 1 lakh crore. They may be, each state may be having their compulsion, but again, the government also has its limitation. We have seen the GST collection figure have been coming at maybe sub 30,000 crore. So how the deficit is all going to be met? But I don't think, I'm not saying that one should not handle the situation what we are facing now in the current situation. The government is not, and at least in its right wisdom, the government for the last 1 week or so have also started taking a view to revive the economy or to restart the economy instead of extending the lockdown. And I'm very happy. If you see of the 700 districts, about 350 districts are placed in the green zone and things are starting there. So I think that whatever benefits or the announcements which we have seen from the government may not be sufficient, but they are all seen coming in, and I think they are keeping the requirement and need of the situations, are giving the stimulus at a regular interval.
Right.
Vikas,
Point
I
well
think
taken, sir.
we can take the other question at the end of the session.
You want to take other questions at the end of the session?
No, after the end of second session, we can take. Shankar sir may deliberate, and then we.
Okay. Sure. Just a moment. So, Shankar sir, before we invite you, I mean, I think the ball is set rolling now. We need to have your views on the capital market, the road ahead. We have heard Mr. Tulsian speaking about different sectors, asset allocation, and some do's and don'ts. Sir, the floor is yours, sir.
Thank you very much for having me. To begin with, our approach to investing and my personal approach to investing has undergone a change over the last 30, 35 years. I started investing, I think, first investment I made when I was just in college, 1982. And from that point, I have learned many things from obviously reading a lot, from applying a lot, finding that some things work for me, some things don't work for me. And this includes Warren Buffett and everybody you can care to name. Over time and over 30 years, you will realize that you come down to what works for you. And in investing, that is the whole point, that each at least a professional investor has to eventually evolve a style of his own. Because just simply copying somebody else's style is not going to work. It's like in cricket, you cannot watch a certain batsman play and then try to build your technique on that. You can watch 100 batsmen bat, but then pick things from that and evolve your own style, which is based on your body, your mental sort of makeup, your physique, your fitness, all of those things. So it's the same thing in investing. Don't just blindly copy what anybody says. Try everything, but ultimately evolve a style of your own. So that's a broad, overarching advice I have for anybody who asks me that how should I invest. Just in this year itself, okay. So in January, and in our PMS as an personal investment, etc. We, in fact, on January 1st, I tweeted saying that the financials are a crowded trade, and everybody and their uncle is in this financials. And having been a banker, I know a bit about financials, more than what most people know.
Sir, sorry to interrupt. Can you be a bit louder?
Can you hear me?
Yes, sir. Fine enough. Thank you.
Okay. So being a banker, I know a bit about financials that many people don't. I know how much accounting hanky-panky goes on. I know how easy it is to report numbers, how that the market wants to see, how easy it is to adjust provisioning, and many things happen irrespective of how much account auditing and RBI oversight exists. So we did not have a single financial or bank or anything in our portfolios that we manage. In February, I remember around February 15th or 20th, by that time, the COVID thing, I thought it was nothing. On the 1st or 2nd of February, on the budget day, there was a party which we have annually for all our stock market brethren. And, and people asked me, what do you think of this Corona thing? And I said, I don't think it's anything at all. We have seen many things like this come and go, and I think we will be okay. That was my view on February 1st. On February 20th or 25th, I was sitting and looking at the data globally. I was watching the market action. And it just came to me that this is it. I mean, the markets are just poised at the edge of a cliff. And here is when it goes over. And this was not about India, this was about globally. All global markets were. And by the way, it's important for us to understand this. We sitting in India just think that India is the epicenter of all things in equity market. There's no such thing. India is just one market out of maybe 25, 40 markets, which are traded generally speaking across the world. Last year in 2019, India was probably the worst performing market just after Turkey. Okay? And maybe a couple of markets more. It was up about 8-9%. The MSCI World was up 26%. I'm talking dollar returns. Okay. Russia was up 50%. Brazil was up, I think, about 40%. US was up between 30 and 35%. Even European countries, Spain and Portugal and all European are 25, 28%. India was the bottom of the pack. Bottom. And this is, mind you, this was the Nifty. Nifty returns were 9%. I think small cap returns were probably, 0 or maybe even negative or maybe plus 3%. And 2018 itself was a down year for India. So India, I think, was flat or maybe 3% down. So last 2 years, we've had zero returns from equities in India. Okay, that doesn't mean that people have not made money. Yes, there have been, as Tulsian said, there have been 10, 12 stocks in the Nifty which have made money, and their financials are there, FMCGs are there, Asian Paints is there, Lever is there. We've made money being very, very choosy. But has there been a broad bull market in India? Absolutely not. After the collapse of 2018, of 2017 bull market in small caps, which was, I think, a blowout year, 60% up. After that, we've seen only negative returns from the broad market. Now, so the world was brimming with happiness going into January this year. Everybody, and we deal with investors across the world. We manage money across the world, including in India. And everybody was saying that this is going to be a great year, brilliant. But we are just going to have another 25, 30% up year this year. And I'm by nature a very cautious person. Okay, and I'll explain to you why in a bit. And I said to everybody that, guys, back to back 40% years don't generally repeat. I mean, it happened in 2006 and 2007, and we now know how 2008 panned out, right? So going into this, we are very optimistic. Things are great, lovely. You need to just step back and say, are we getting into some kind of a fixed mindset that things cannot ever change? So with that mindset, when I was sitting in the third week of February and looking at all indicators that we watch and we have developed over 25 years, a lot of tools and indicators to tell us, these are not technical indicators, by the way, these are many, many other, quantitative stuff that we watch. And they told me, it just came to me that, guys, I think we need to be safe. We need to step aside. So we exited quite a bit. We did a lot of things in India and globally. As a result of which, in March, where every market across the world fell 25, 30%, India was, obviously, we all know, 30% down. We were down only 3% in one of our schemes, and we were down 7% in a pure equity scheme. So we sidestepped the entire carnage completely. But then we said, all right, so we have escaped this. And usually when you start to feel too happy, that is the time when you make the biggest mistakes in investing. So which is why I never get too happy and I never get too sad. You remain very much at an equilibrium level. Then you'll get some things well, you won't get everything right. And there's no point in fussing about it, just like playing cricket again, wait for the next ball rather than worry about or get too happy about the last ball that you hit for a 6 or you would drop. So April 1st, we went all in. We deployed all the cash we had accumulated in the month of March. As a result of which, we have ridden the April rally in India. We are up 16%. So on a 2-month basis, we are actually up. And by the way, in all our schemes, year to date, we are up. While a market which is down 20%, we are up between 3 and 10%. In a down market, 20% down, we are plus 3 and plus 10. But important thing is, India is not the only market where we have seen this rally. So every market in the world, from around the 20th, 22nd of March started to rally. India started a little late, but India also rallied. So it's not that the move that we've seen in India is something isolated. It has happened across the world. Also, it's very important to see the overall complexion of markets this year. As Tulsian pointed out, in 2008, pretty much all markets were down between 55, 65, 60%. It was a uniform, broad bear market in which everything was crushed. This time it's very different. This time, while yes, we have fallen a lot, and I do believe that we are in a serious bear market in India anyway. But the important thing is, it's not a uniform bear market. The world has been divided into two categories, which is the world markets are betting that these countries will come out of it better and stronger. And there is a group of countries which will not come out of it very easily or very quickly. So at the bottom, you have Brazil, you have Mexico, you have Indonesia, you have South Africa, and you have India, which are between 20 and 35% down, more or less. At the top, you have the US, you have Switzerland, you have Taiwan, you have South Korea, and a couple of other Malaysia and all that. Market is saying that this is a global problem which has never been seen before, but it is not a uniform problem. The markets have taken differentiated views of which countries are capable of coming out of it with the balance sheets that they have, with the kind of maybe health infrastructure that they have, and which countries will have trouble. And unfortunately, India has been placed into the country which will have trouble coming out of it. Now, why are the markets saying this? That's very important for us to understand. The reason is simple. If you look at the category and the macroeconomic fundamentals of all these countries at the bottom, okay, they are countries with very poor national balance sheets, okay, very high deficits. So Brazil is running at about 10% deficit, India deficit, nobody knows. It might be 8, 10, 12, God knows how much. If GST is 30,000 crores 2 months in a row, you are already down, 150,000 crores in just 2 months. And I don't think anybody can assume that normalcy will mean everything goes back to the January level quickly. Nobody in this conference or elsewhere should believe that. Even if we return to normalcy, it will be a gradual bumpy road. So that means the GST will remain at very suppressed levels for quite some many months. So the market has said that countries like South Africa, countries like India, countries like Brazil, countries like a couple of others don't have the financial resources to spend their way out of this trouble. And as Tulsian said, US has spent $2.5 trillion. They will probably put in 2 more. They have the balance sheet to be able to do that. China has the balance sheet to be, and by the way, I missed out China. So China is again one of the top performing markets. This year it's down only about some 7% or so for the year. US is now flat. So Switzerland is down about 7-8% too. So imagine the big difference between the top 5-7 markets and the bottom 5-7 markets. And the reason for that, as I just mentioned, is the markets are differentiating between the capability of each of these markets to survive and come out of this crisis. People also ask me, how will India emerge out of it? And I say this, that the nearest contrast we have is the 2008 crisis. By the way, we also have the 97-98 crisis. Go back to both these crises and see the growth rates India was running at in those times. People forget this, but let me give you some data. In the 97-98 crisis, okay, which was the Asian crisis that we all know, the big contagion, economies got crushed and all that. You know what India's growth rates were in those years? 96 was a very strong year for India. I think we grew, maybe I think 7.5%. 97 we grew 8%. Coalition government. There was a revolving of prime ministers coming in and out. We grew 8%. Next year again we grew 8%. Imagine in the worst possible crisis that by at least that time I had seen, barring the 91 crisis, which was just an India crisis, not a global crisis. But for a reasonably big crisis, India still grew 7%, 7.5%, even in those most troubled years. 2008, go back 1 year, in 2007, India grew 10% with under 1% fiscal deficit. That's the kind of big, solid numbers India was posting in 97, 98, in 2007, and then a crisis hit you. So imagine this, you're a human being. Think of it. You are healthy, you're working out, going to the gym, you're eating well, you're sleeping well, you're not stressed, and then you are an illness or whatever. You will, just go past it as if nothing happened. But the same illness, same thing afflicting a person who's unfit, who is, struggling, was anyway sickly, that person will probably die or at least not recover for a long time. That is exactly the contrast between the India of facing the 97, 98 crisis, facing the 2008 crisis. In 2008, we never felt the crisis in India to the extent that the world felt it. I was in the US several times in 2008. There was absolute mayhem, at least in New York City. But in India, barring Bombay, I mean, I traveled around villages in 2008. I went to, the poorest of states, and everywhere I heard villagers tell me that life is good, sir. आप लोगों को क्या problem है पता नहीं है बॉम्बे में. हमको तो आप देखो यहाँ पे हम घरों पे हम जो 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 कच्चे घर थे हम उनको पक्का बना रहे हैं, जो पक्के थे अब उनको पेंट कर रहे हैं, जो मोटरसाइकिल वाले थे उनको एक छोटी मारुति ले रहे हैं. We are upgrading our consumption. The MSP that we are getting is very good. नरेगा से पैसे आते हैं, घर में 10-20 हजार रुपए आ जाता है, तीन प्राणियों का घर है. I came back. I remember that in 2008, I think July onwards, I said यार बॉम्बे से निकलो, यहाँ पर बैठ के खाली इंडेक्स देख के and अपने यार दोस्तों से बात करके साउथ बॉम्बे में, this is going to just corrupt our minds. Let's go and see what's up country. I went to cement depots in small villages. They said कि सर धन cement बिक रहा है, paint बिक रहा है. Maruti numbers came out in October. They were plus 30% sequentially. Bajaj Auto numbers came out. They were also very strong. Hero Motor number came out in November 2008. Very, very strong. I said, यार ये वो क्या रहा है? यहाँ index तो यार down 40%, 50%, 60%. और यहाँ पर the real economy, when I'm going out, meeting people, they're telling me सर कोई मंदी नहीं है, कोई कुछ नहीं है. Market छोड़ दो सर. Because anyway they don't invest, so they're not even concerned or exposed. They said life is very, very good. That is because there was a deliberate push to stimulate rural India. The government decided, we have limited capital. Where should we invest? Let's push money into the hands of rural India. So at the same time, as obviously we talked to companies, I was talking to all the FMCG companies or all the auto companies, they said that rural demand has suddenly picked up from the third quarter of 2008. Urban is very bad. So forget about Bombay, Delhi, Calcutta, Madras. That's very bad. But rural is roaring. Our analysts commented with levers and all that. They said that rural demand is solid. So therefore, by the last quarter 2008, by the way, I got the 2008 crash perfectly on the spot. I was publicly, I said that this index was 21,000 is going to go down to sub 10,000. I said this in January of 2008. It was not just about India, it was a global macro call. I thought, again, this is a big tipping point, it will happen. But by December or by January 2009, I started to reconsider my view that the real economy is nowhere as close to what the stock market is telling us. Okay? Because the real economy is strong, stock market economy is bad, or urban economy is bad, but India is not an urban country, it's still 60-70% rural. And that maybe will save the day. And by March or April, whatever I was thinking actually came out to be true. Markets reversed, and we then have had a 10-year bull market since then. This time is different. This time is completely different. This time, anybody, all the people on this call know how badly the real economy has been damaged. But what is more important is, it's not as if in January 2020, we were growing 8% or 9% with a small deficit. We were already a hurting economy. The economic growth in India has plummeted to a 20-year low. We all know that is the data published by the government of India. When you were already a sickly man and then a problem like this hits you, you are worst prepared, worst placed to survive it. And even if you survive it, to come back to a normal running state when you will be like a normal human being is several months down the road. That is the reality. We are not America, we are not Europe, we are not China. Anybody who expects that to happen or a big stimulus to come out, I only say, government ke finances dekh lo. In July of 2019, when the budget was presented, if you saw the revenue estimates, I forget the number, it's like 27% revenue growth for the remainder of the year. I said, kya baat kar rahe ho? When your nominal GDP growth is not going to be more than 10-12%, even assuming some fudging of data. 10-12% के ऊपर आना नहीं है, तो नॉर्मल 1.5 का मल्टीप्लायर पकड़ो एट द बेस्ट, तो मतलब 15-17% आपकी रेवेन्यू ग्रोथ होगी। यहाँ पर आप फोकस करो 27%, how do the numbers match? And then when comes December, when we were sitting and doing the revenue shortfall for the remainder of the year, it was like some you have to grow in 3 months on 40-50% to just come to, you know, what your original forecast was, which obviously we know, even in January we knew that's not going to happen. It's like कि यार आपने स्टार्ट ही किया है कि आपको हर ओवर में 10 रन बनाने हैं, and by the 20th over your run rate has climbed to 40 runs in over. That game is lost. There's no point even playing it. ये तो आप एक आपको फॉर्मेलिटी निभाना है कि चलो जी 50 ओवर है तो वी विल हैव टू प्ले इट आउट, बट द गेम इज लॉस्ट, देयर इज नो वे यू एबल टू get to those targets. So but the problem is when you make all these nonsensical forecasts in your national budgets, the forecast is nonsensical but the expenditures are not nonsensical, because based on those forecasts you have made some expenditures. अब वो तो करना पड़ेगा, रेवेन्यू आए नहीं है, आपने बोल दिया कि मैं फलानी चीज पे इतना खर्चा करूंगा, उस पर इतना करूंगा, उस पर इतना करूंगा, इस पर भैया वो तो देने के लिए पहले वो रेवेन्यू तो राइट होना चाहिए, पर रेवेन्यू राइट नहीं है, बाकी चीजें सब डाउन द लाइन आपको देनी पड़ेगी, सो योर डेफिसिट विल गो आउट ऑफ कंट्रोल. सो when people say stimulus package, I say yeah, you will get something, but don't expect anything miraculous, because the government itself needs a stimulus package. So जो जिसको चाहिए stimulus package वो आपको क्या देगा आखिर? That is the broad macro reality. We need to face it. And one thing, which is why I was saying the evolution of my investing style is, अगर आपने market के इस तरह के situations में where markets are down 20%, 30%, 40%, 50%, if you manage to escape with minimal damage, you might be damaged. Of course, I mean, very few people will come out with money in their pockets. Okay, the people who are traders, I don't trade anymore, so I'm too old for that. But 2008, I made a lot of money. 2000, the tech bust again. I saw that coming, and I made a lot of money on the run up. But I said, "Yeah, बहुत हो गया, इस तरह हफ्ते का 8-8% stock नहीं चल सकते." And my PNL is telling me that I'm very, very smart, but in reality, I know I'm not that smart. It is just a market momentum which is making me look very smart, and I'm getting out of it. And I remember that day in February of 2000. I exited all my positions, and I told Devina that यार चलो छुट्टी पे चलते हैं कहीं दुनिया में, यहाँ पर रहेंगे तो वापस फंस जाएंगे. एंड उन दिनों ग्लोबल रोमिंग नहीं होता था, सो वी लेफ्ट द मोबाइल फोन आल्सो इन बॉम्बे, वेंट टू स्पेन फॉर आई थिंक कपल ऑफ मंथ्स. व्हेन वी वेंट बैक इट वाज डाउन आई थिंक 50%. फ्रॉम दैट टाइम अगेन इट वाज प्योर लक, बट मोर देन लक इट वाज जस्ट अ कॉमन सेंसिकल अप्रोच कि इतना पैसा कैसे बन सकता है 1.5 साल के अंदर में, कि जो चीज लिया है वो 20 टाइम 30 टाइम 40 टाइम हो गया. सो point is, when you escape the big losses in markets, by and large you are okay. A simple आंकड़ा है कि अगर 100 रुपए का इन्वेस्टमेंट था, if you're down 30-35%, as many people are down even in this year, it will take you a 50%, 70% rally to just return you back to 100 rupees, right? अब 50-70% उसी पोर्टफोलियो सिमिलर पोर्टफोलियो कमाना नॉर्मल सिचुएशंस में कम से कम 2-3 साल लगेंगे. while अगर दूसरा आदमी 10% डाउन है, अगले बार मार्केट का रैली हो 10-15%, वो 100-105 रुपए पहुंच गया, फिर मार्केट का 20% हुआ, आप अभी 90 पहुंचे हो, 95 पहुंचे, वो ऑलरेडी 125 पहुंच गया. Another 10-20% rally is already at 150 or maybe 140, and you are still at 105 rupees at the highest. That is the point, that avoidance of loss has to be the central principle of investing. If you avoid losses, and big ones like this, you can't avoid all losses. You get 8-10% लगेगा. It's like यार गेम खेलने आए हो तो बॉल लगेगी, कुछ. But to get retired hurt, to get being forced to exit the game, and you will be forced to exit at the worst time when you should be actually being in the game and buying, this kind of poor risk management will kill you. So the evolution of my learning is this: risk management is the center of God in the markets. Okay, if you cannot manage risk, if you cannot control risk, you should not be in this game. And by the way, as Tulsian correctly said, even the most seasoned money managers who are professionals and are paid by people fancy fees to manage the money, they also don't understand this, or they don't practice it. You can see that most funds, most PMSs, mutual fund down 25-30%. I don't understand, what the hell were you doing? इतना तो यार रिटेल इन्वेस्टर ही डाउन हो गया, तो फिर आपको किस बात के 2% मिलते हैं फीस इस चीज के लिए? So the point is, risk management to me is the central god. Second god for me is top down asset allocation, कि कितना पैसा कहाँ डालना है. That first level decision is asset class कहाँ पे. That's one thing we spend a lot of time. अब सिंपल एग्जांपल आप ले लीजिए, लास्ट के 1-1.5 साल 2 साल में गोल्ड हैज बीटन इक्विटीज बाय अ वाइड मार्जिन. मतलब आसपास भी नहीं है इंडियन इक्विटीज कंपेयर टू गोल्ड. $1200-1300 की चीज $1700 हो गए. रूपी जो 65 रुपया था वो 75 हो गया. इमेजिन एज एन इंडियन इन्वेस्टर काइंड ऑफ blowout returns the gold trade has given you. In our portfolios that we manage, we've had gold, and one of the reasons why we survived March was that we moved out of equities into gold and into GSEC. We never buy anything which is corporate bond, because again, I've been a corporate banker. I mean, I know companies. I don't buy all this. And separately, when I was a kid running around doing debenture placements to LIC and UTI in the 80s, even in the early 90s, तो हम लोग जाके बोलते थे साहब यील्ड टू मैच्योरिटी इतनी है. तो वो बड़े बुजुर्ग लोग थे, बहुत ही अकलमंद लोग थे. आई हैव लॉट ऑफ रिस्पेक्ट फॉर ऑल पब्लिक सेक्टर बैंकर्स एंड पब्लिक सेक्टर फाइनेंशियल इंस्टीट्यूशंस. दे आर वेरी वेरी स्मार्ट. कहते थे बेटा करंट यील्ड बताओ. हमने कहा सर करंट यील्ड क्या मतलब बनता है, आपको तो 5 साल के बाद इतने पैसे मिलेंगे और रिडेम्पशन प्रीमियम है तो YTM ही देंगे. बोला बेटे ये हिंदुस्तान है, तुम बच्चे हो अभी 26-27 साल के हो, समझ में आएगा धीरे धीरे. मेच्योरिटी तक कोई पैसे नहीं गिरता, जो मिल गए आज हम उसको ही गिनते हैं, बस बात खत्म हो गई. So the reality is that I don't buy corporate bond and all. This is all nonsense. जो अच्छी कंपनियां उनको चाहिए नहीं, जो बुरी कंपनियां उनको चाहिए, बट उनको देने का कोई मतलब नहीं. So we were into G6 this year have given us, I think, a very very hefty return. Okay, gold has given us a terrific return. Equity now in the last 15-20 days has given return. Otherwise, it was a wasteland. In 2019, gold gave us like I think 25%. G6 also did a pretty good job. You could have only some 9-10%. So the point is top-down asset allocation, first mantra. वहां पर डिसाइड हो गया कि पाई चार्ट में इस बार गोल्ड कितना होना चाहिए, G6 कितने होने चाहिए, इक्विटी कितना होना चाहिए. Then we come to the equity pie. वहां भी again top down है. I always recommend this: never have less than 20-25 positions in your portfolio. Not less than that. No way. No single position should be more than 5%, irrespective of भगवान की कंपनी को क्यों ना हो. 5% के ऊपर. I would in fact say that keep it nearer to 3.5-4%. Okay. So when people say I have great deal of conviction and I know this company, etc., I said यार मैं बहुत साल से कर रहा हूँ. Nobody knows anything beyond 12 months. Okay. अगर कोई कहता है तो वो आपको बेवकूफ बना रहा है, कोई बेवकूफ बना रहा है. Nobody has any clue क्या होने वाला. या तो 12 month तो क्या 3-6 महीने नजर नहीं आता किसी को. So I don't make bets which I have no clue about क्या होने वाला है. Like we bought HDFC Bank in 96-97. IPO के टाइम 30 रुपए में खुला था. I knew I was I worked in City, I worked with Activity, I worked with pretty much the whole team. I knew कि यार ये लोग ठीक करेंगे. Did I know that they're going to go up to market cap 3 times that of 4 times that of SBI? Did Aditya Puri know that? Did Paresh Uthan? Nobody knew that. We bought Amazon in 2001 at about $11, right? It was supposed to go bankrupt. We made 150 times. Okay. Did Jeff Bezos know कि $1 trillion कंपनी बन जाएगी? साहब उसको मालूम नहीं था कि वो अगले साल सर्वाइव करेगा कि नहीं करेगा. We bought Apple in 2002. तो point is very simple. Nobody knows. Anybody who says कि fundamentally good company है, वो तो hindsight है, मालूम चलेगा ना. Apple was bought in fundamentally good when it was a loss-making company in 2002. Market cap was less than Infosys at that time. Who knew? HDFC बैंक को क्या मालूम था कि इतनी बड़ी कंपनी बन जाएगी. बजाज फाइनेंस को क्या मालूम था इतनी बड़ी कंपनी बन जाएगी. तो पॉइंट इज आई डोंट नो. आई टेक अ बेट कि यार 25 कंपनियां का ठीक ठाक मैंने सिलेक्शन कर लिया है, उसमें से 5-7 तो अनबिलीवेबली चल जाएंगे. हो सकता है 4-5 उसमें डूब भी जाएंगे, बट मेरे रिस्क मैनेजमेंट का 25% अगर डाउन हो तो मैं निकल जाऊंगा. तो अगर 5-5% है मेरा, 25% डाउन हो, 1-1.25% एक पोजीशन में, राइट. 1-1.25% है, 5 पोजीशन है, 5-7% का लॉस है, बट सामने में चलने वाले चल गए 40, 50, 200, 500. At the end of the year or any period, I will come out ahead by a wide margin. Wide margin मतलब उसका कोई आसपास आप खड़ा नहीं हो सकता साहब. और जो मैं ये कह रहा हूँ, all of you can implement. You don't need to do anything very very fancy. Point is that discipline you will not have to be able to take a loss. Discipline you will not have to make a diversified portfolio. Discipline you will not have to build a portfolio right from the apex, which is gold कितना, G6 कितने और equity कितना. If you follow a systematic process, then end result by and large like cooking ना. बड़े शेफ बोलते हैं ऐसा है वैसा है, मैंने भी बहुत कुकिंग किया. मैंने भी देखा यार इंग्रेडिएंट अगर ठीक है, आपने ठीक जगह से आपने सामान लिया हुआ है और आप फॉलो करो प्रोसेस क्या है, ज्यादा दिमाग ना लगाओ. किसी ने लिख दिया, किसी मास्टर ने भैया ये करो, आप करो ना. आपको भी मोटा मोटी हो सकता है बुखारा के लेवल का दाल नहीं बनाओगे, ठीक ठाक दाल बनाओ. So that's the point. None of this is so difficult that people cannot do it. It's doable by each and every person watching this show, but the discipline to implement is very, very hard, right? So now let us come to the scenario as it exists. So that's my learning over 30, 35 years of doing this. As disciplined and risk mitigated that you are, you will come out. You will win this game. Nobody aapke paas Warren Buffett khada nahi ho payega, by the way, just for information. If you follow process of risk mitigation, risk management, diversification, not getting overexposed to any particular sector. So the other thing also is, in our PMSs, we are on 40 positions. Okay. What does that mean? Now, we are not convinced about anything. In the month of April, we have 5 positions which are up 80%. 5 out of our 40 positions, which are up 80 or 100% returns, if you want to say. Just 1 month. Okay. But am I sitting and saying, yaar, kya company hai, kya management hai, yaar, uska vision hai? Bullshit. I have no clue. आज उसने कर दिया है, अगला डेटा पॉइंट सही आएगा तो मैं रहूंगा, अगला डेटा पॉइंट ठीक नहीं आएगा, we will reconsider our view. So when you have too much conviction, that is where your biggest mistakes happen. Keep yourself in a state of zen. As I said, ना ज्यादा खुश होना है, ना ज्यादा जिसमें दुख मनाना है. डेटा के ऊपर हम चलेंगे. So we have a very, very data driven process. We are not human being driven. मैं तो मैनेजमेंट से मिलता भी नहीं, मुझे कोई इंटरेस्ट नहीं कोई मैनेजमेंट से. अगर आप इतने महान हो तो आपके नंबर बता देंगे साहब, आपका बैलेंस शीट बता देगा, आपकी अकाउंटिंग बता देगी. And we have tools done which we can analyze balance sheet across the world. We have done huge amount of AI and machine learning work. So we don't need to meet anybody. हमें जरूरत ही नहीं किसी मैनेजर से मिलने. जितना मिलोगे उतना ज्यादा कंफ्यूजन हो. उनका विजन, body language, etc. etc. So the long and short of it, systematic process, data driven, risk managed, diversified positions, let the winners run, cut your losses at 20-25%. I think you're fine. Now coming to India, the approach we took, as I said, was April 1st. We said we've had a big cut. It's time to go back in. We went in and it's been very rewarding. Now, what happens from here on? Because the topic is road ahead. In our view, India will be a struggling market, or rather an economy, to come out of this problem. And again, I say this in all neutrality. There is no emotion. I'm not an emotional person as far as markets are concerned. I'm emotional about things, but not about markets. Okay. So my reading of the data is that the government itself is facing revenue shortfalls of, I mean, अगर जीएसटी को 1.25 लाख करोड़ होना चाहिए था, 1,20,000 होना चाहिए था. अगर आप 30 पे चल रहे हो, ये महीना भी आपको मोटा उतने पे ही जाने वाला है, तो 2 महीने में अगर आप 70-80 into 2 करोड़ डाउन हो गए, तो मतलब it is a crisis. The government itself, तो आपको क्या देंगे? And also budget itself gave you nothing. So तब तक तो कोई कोरोना था ही नहीं. अगर उसमें ही लोग बोल रहे थे ना कि fiscal deficit बढ़ा देंगे और stimulus करेंगे, growth is very, very poor, 20-year low, etc., etc. The message that came out कि साहब हम कुछ नहीं देने वाले, जिसको लोग समझना आप लोग कर लो, गवर्नमेंट के पास पैसे नहीं देने. अगर ये कोरोना के पहले स्थिति थी, तो कोरोना के बाद जब ये अगर आपको महीने का 2 महीने में 1.5 लाख का लॉस हो रहा है, आप कहाँ से दोगे स्टिमुलस? तो कुछ ना कुछ दिया जाएगा. It will be a band-aid. It will not solve anything. This kind of damage will take several months, if not quarters, to come out for Indian companies, Indian companies. And as regards financials, I remain very, very circumspect. Most of the banks are doing very well. I've been talking to the banks, and I can tell you it is a serious problem, and it is not not of their fault, because businesses suddenly, good businesses, अगर आपने मान लीजिए कोई मल्टीप्लेक्स कंपनी को पैसे दिए थे, सारे AA, AAA रेटेड कंपनियां थी, सडनली अब सिनेमा कौन जाने वाला है अगले साल का साहब? कौन जाने वाला है? That means कि suddenly that good credit will go back. और ये 3 month ये 90 day moratorium से क्या होने वाला है सर? जब अगर आप पैसे ही नहीं है तो 90 day के बाद कहाँ से दे दोगे? They will need to extend the moratorium for sure, and I think it will happen. But even with 180 days, nothing is going to be solved. They will need to give a restructuring option, because otherwise nobody is in any position to repay their loans. Plus job cuts, pay cuts. So EMIs per default ho nahi hone, without any doubt. And while HDFC, I have known them for the last 30 years. I have enormous respect for Mr. Deepak Parekh, Aditya Puri, Prashant Jain, all of them. Okay, they're great human beings, very ethical, very straightforward. And I think the kind of management they run is exemplary. All of us should learn as business people how to run great businesses. So, I'm a fan, let's put it this way. And I've seen them from the time I entered the capital markets. It's just an amazing group. I mean, that and Bajaj Group, I think, are the 2 best groups in India in services and in manufacturing. But that said, HDFC AMC trades at a valuation which is crazy. I mean, I don't understand how you can justify, market cap to equity AUM of I think about 30%. I mean, it's crazy. आप क्या करोगे लोगों के पैसे को, मतलब क्या सोना दे दोगे क्या अपने शेयर, आपके शेयर में पैसा ले लेंगे? It is absolutely absurd, these kinds of valuations that we are paying for in asset management, irrespective of how good the asset managers are. It's just a crazy valuation. And as far as the main HDFC is concerned, I mean, my personal view again, and by the way, this is, I don't have any position in any of these stocks, just to be other disclaimer. Okay, this is just an academic view that when housing yields now, rental yields are 2-3%, and cost of housing finance is 8-9%, and you have no prospect of seeing prices rise, I don't see why anybody in the right senses should be buying up. I really don't understand this. I mean, I would rather live in a rented home. By the way, I live in Dubai and I live in a rented home. Because जब मैं 10 साल पहले जब मैं शिफ्ट हुआ, लोगों ने कहा ये बड़ा टाउन मार्केट है, खरीद लो। मैंने कहा भैया मैं नहीं खरीदता। अगर मेरे को 3-4% यील्ड मिलता है, मेरा पैसा 12% डॉलर में कमाता है, तो मैं किस बात के लिए फंसा दूं यहाँ पर? लकीली अच्छा हुआ वहां से 50% डाउन है प्राइसेस इन द लास्ट 10 years, इंडिया में भी डाउन। So the point is very simple. Financials I still want to avoid. There will be all these rallies, technical rallies will keep happening, but I think it's a trouble spot. There are safer places in the market. As I said, in our portfolio, we had 5 stocks. I will analyze the April performance. 5 stocks which are up between 50 and 100%. No, we will take that. So there are great opportunities in the market without any doubt. But remember the rules. Those 50-80% मेरे portfolio के 10-20% नहीं थे साहब, वो 1.5-2%. कोई 1.5 था, कोई 2 था. वो नहीं थे कि मैंने इतना कन्विक्शन था कि मैं 10-20% जाकर डाल दूं अपने क्लाइंट्स का पैसा उसमें. सवाल ही नहीं पैदा हो सकता. मैं तो कहा कि भगवान की कंपनी भी क्यों ना हो, मैं उनमें अपना 5% के ऊपर नहीं. So point is, there are great opportunities. You need to be smart. You need to be nimble. And as I always say, कि I'm never bullish or bearish. I'm always bearish. मैं खरगोश की तरह हूँ. खरगोश का विजन पूरा आँख के पीछे तक जाता है, सर के पीछे. Keep your vision 360 degrees. सब चीजों को देखते रहो. Act करो, but act decisively and act fast. Don't have a fixed mindset कि मुझे bullish ही रहना है, मुझे bearish ही रहना है. Facts change, data change, I will change. So March का strategy was very different. April strategy was very different. And looking at the Nifty की जो situation है, I'm sure May strategy will be very different. But you need to be nimble, need to be open-minded. But whatever your strategy is, risk management has to be your central biggest strategy. And second final point before I leave is all of you need to diversify your investments globally. Because just being in India is not going to make you a big money. I can tell you, we bought a company in January in the US, okay, called Teladoc. That has doubled. Zoom communication, which we are doing this conference, we bought a $70, $140 today. इंडिया में कहाँ मिलेंगे आपको ऐसी कंपनी? चाइना में हमने कम से कम 6 कंपनियां खरीदी, which are up 70% in the last 3 months. यूरोप में खरीदी 25-30% की कंपनियां. So I'm saying there's a huge opportunity across the world. We manage money for Indian people globally. We have a PMS product which starts at even just 7.5 lakh rupees. Start small. कोई जरूरत नहीं कि आप करोड़ों की बात करोगे, है तो बात अलग है. And plus we have a fund where you can put in crores. We have seen last year we did 40% plus in our global portfolios. India was only some 10-12%. That's a return differential even in our own managed portfolios. India और global का difference 3 गुना जाता. So that's my final point. Diversification करिए globally. Top-down asset allocation should be correct. Don't have more than 4-5% typically in a single position. And practice risk management like you practice your daily exercise routine or diet routine or even your worship routine. Those are my parting comments on this. I'm happy to take questions.
Shankar sir, thank you very much for that brilliant discourse, the words of wisdom. You, first of all, so let me tell you, like you have a deep love for cricket. Actually, you've drawn a couple of analogies with cricket. So I guess that was on a lighter note. But then, so yes, we do agree that it should be a discipline-based investing. You mentioned a couple of points about the risk mitigating factors, top-down asset allocation, parting with your assets into worldwide investments, so on and so forth. So now I think the time is just set for Mr. Tulsian and Mr. Sharma to take on the questions head on from the floor itself. So Jitendra, I have noted on a couple of questions from numerous participants. So,
please go on. You may ask the question on their behalf. Yes.
Yeah, sure. So prior to that, sir, there are a couple of members who raised their hands. I would just like to invite 2 or 3 of them to have their interactions as well. First, let me call upon Mr. R.S. Jawar. Mr. R.S. Jawar, please unmute yourself and please pose your question.
अपने महक का ज्ञान नहीं होता वो तो अंधाधुंध बनी जाती है
Sir, you're not clear, sir.
केवल बहने जी को अपना धर्म समझ
Jawar ji, आप clear नहीं है. I think we can take next question, Mr.
Yeah,
Rakesh.
next is Mr. Sandesh Rathi. Please unmute Mr. Sandesh Rathi. He's raised his hand.
Mr. Rathi is not there. Actually, he has
He's
not
not
raised
there.
his hand.
Sahil Ruya.
Yeah, Sahil is there. Sahil, we can unmute.
Yes, Sahil, just unmute. Let him pose the question. Then
Hello.
we'll take on.
Yeah, Sahil, please.
Yeah, my question is to Shankar sir.
Yeah.
Sir, you are talking about changing the strategy from time to time. So how can we design a strategy for a long-term objective, long-term perspective? If we keep seeing the data 360 degree and accordingly decide our positions, so how we'll manage a long-term perspective?
It's very, very straightforward. You are invested in the markets unless the markets have told you to exit. Told you means आपने अपने लेवल्स रखे हुए हैं साहब कि ये प्राइस तक मैं इसमें हूँ इस पोजीशन में ये प्राइस के नीचे जाएगा my system automatically will exit. So you don't have to make decisions, you only have to make the rules. Rules are these: if markets are in equilibrium, markets are trending up, your 20-25 positions are running. क्या करना है आपको? क्वार्टरली नंबर्स आते ही हैं, आप क्वार्टरली नंबर्स आप एग्जामिन करो. इफ नंबर्स आर ऑन ट्रैक, कीप योर पोजीशन. इफ नंबर कहीं पर आपको लगते हैं कि अब ये डाउनग्रेड होने लगे हैं, ठीक नहीं हो रहा है, मार्जिन कॉन्ट्रैक्शन, देयर आर मेनी क्लूज. यू विल एग्जिट दैट पोजीशन. नाउ यू हैव 20-25 पोजीशंस, उसमें से एक दो आपको उसमें हो सकता है कि आपको नंबर बड़े पुअर आए, स्टॉक गिर गया, यू आर एग्जिटिंग फ्रॉम इट. देयर इज नो इमोशन हियर. यू हैव योर लिस्ट, and to remain in the list the stock has to keep performing by way of the fundamentals. And the other thing, the price also must keep reflecting the fundamentals. इस स्टॉक को कम से कम यार चलते रहना चाहिए. अगर नहीं चल रहा है, therefore there is already a problem. If you follow these broad rules, keep the portfolio alive unless something happens to tell you exit this position, which is usually only data, nothing else. Numbers आ रही है, जो क्वार्टर के नंबर आते हैं, analyze करके.
We have Mr. Ketan. Ketan ji, please ask your question.
हाँ, मेरा क्वेश्चन ये है, फंडामेंटल्स के हिसाब से अगर ईपीएस 8 रुपया आ रहा है और उसका प्राइस अभी भी 16 रुपया है जो पहले 90 रुपया हुआ था, तो उसमें फंडामेंटल्स में क्या प्रॉब्लम है? उसकी 1000 करोड़ की टर्नओवर भी है और एवरी क्वार्टर उसमें 1-1.5 रुपया का ईपीएस आ रहा है और उसके प्राइसेस अभी भी 18 के और तो 16-17 रुपया ही क्यों आ रहा है? उसके फंडामेंटल्स में क्या प्रॉब्लम है?
ये सवाल किनसे है?
Tulsian ji, I think
कि ऐसा है कि पहले तो मैं बता दूं कि कोई भी यूनिफॉर्म पी मल्टीपल किसी के लिए अप्लाई नहीं होता है. अगर आप जैसे मैंने बताया कमोडिटी सेक्टर के स्टील सेक्टर में जाएंगे आपको पी मल्टीपल मिलेगा 6 का. एफएमसीजी क्वालिटी कंपनी जाएंगे एचयूएल जैसे में तो पी मल्टीपल मिलेगा 50-55 का. नंबर 1. नंबर 2, बाजार में कोई भी चीज डी ग्रोथ पसंद नहीं है. शेयर बाजार हमेशा हर कंपनी से, चाहे वो मिड कैप हो, स्मॉल कैप हो, लार्ज कैप हो या ब्लू चिप हो, हमेशा एक्सपेक्ट करता है कि हर क्वार्टर में कहीं ना कहीं उनकी टॉप लाइन और बॉटम लाइन, और अगर टॉप लाइन ना ग्रो करे तो बॉटम लाइन जरूर ग्रो करनी चाहिए. तो जहां पे डी ग्रोथ शुरू होती है बॉटम लाइन में, वहां पे बाजार जो है उस शेयर को नीचे की तरफ ले जाना शुरू कर देता है. और जो आपका सवाल है कि ईपीएस अगर 1-1.5 रुपया है, सिर्फ आप ईपीएस अर्निंग, अगर वही एक एचडीएफसी ग्रुप की कंपनी होती है, और ये सारे मैं उदाहरण दे रहा हूँ, मैं बार बार एचडीएफसी का मतलब ये नहीं कि मेरा कोई एचडीएफसी में आपको खाली एक ब्लैंक कॉल है. ये अगर एक एचडीएफसी ग्रुप है और एक दूसरा एक नॉन डिस्क्रीट एनबीएफसी ग्रुप है, तो उन दोनों में मल्टीपल का काफी फर्क पड़ेगा. जैसे बजाज फाइनेंस आप देखिए, आप उदाहरण के तौर पे 3 महीने पहले प्राइस टू बुक 9 का था, जबकि दूसरी आपको एनबीएफसी, रेप्यूटेड एनबीएफसी, चाहे वो श्रीराम ट्रांसपोर्ट हो, जिसका की ईपीएस 100 रुपया भी था, 120 भी था, आपको प्राइस टू बुक 1.5 पे मिलती थी और पी मल्टीपल 6 पे मिलती थी. तो प्रमोटर, सेक्टर और कंसिस्टेंसी तीनों चीज जो है वो पी मल्टीपल को डिसाइड करती है, प्राइस टू बुक को डिसाइड करती है.
Yeah,
The next question, let me.
Vivek can ask the question and then we will take from chat box. Vikas.
Okay, sure.
Yeah. Thank you, President. Sir, my question is again to Tulsian ji. Sir, how to ascertain a promoter? Because some promoters like companies like Quality Limited, Yes Bank, and they were doing good profit every year, giving good dividend. And one instance happens and the turnover of Quality like falls from 6,000 to 1,000. The net worth moves from 1,000 plus to minus 1,800. 1800. So how to ascertain a promoter being a retail investor?
देखिए मैंने इसका आपको जवाब दिया था कि जिस हिसाब से द वे आई हैव डिस्क्राइब दैट फर्स्टली इफ यू हैव एलोकेटेड योर equity allocation say 60%, if I'm not 66% in the large cap, so you have referred to the quality or maybe Vakrangi or any other, see the market cap. If you have found the market cap to be at 8,000 crore, that means that company is necessarily getting placed in the mid cap category or maybe in the small cap category. So you cannot have your total portfolio size ka 20% allocation in that particular asset class or maybe in that particular category. अब सवाल आता है कि अगर आप हर कैटेगरी में 4-4 स्टॉक्स भी रखेंगे तो उसका फिर फर्दर एलोकेशन आएगा 2%, 1% या 1.5% वैसे शेयरों में. तो अगर आप उतना करने जा रहे हैं, मैं नहीं कहता हूं कि आप क्वालिटी जैसी कंपनी को एक साल बाद वो फर्ज निकलेगी या फ्रॉड निकलेगा या फिर वो जो भी ऐसी कई कंपनियां थी, कोई भी उस वक्त तो उस पर कॉल नहीं ले सकेगा.
तो ले रहा हूं आपका 1 मिनट.
अगर आपने रिस्क लिया है तो आपका 1-2% का जो कॉल जो है जो उसमें डिटोरेशन आ सकता है.
Yeah, because we can take the question from chat box.
Sure. So just one important question. This is for Mr. Tulsian. This is a question from Mr. Umesh Jain from Delhi. Jitu, if you can just unmute Mr. Umesh Jain, it's a very important sector that he's talking about. And in fact, both the participants or panelists not spoken about it.
Please, Umesh Ji.
Yeah, thank you, Vikas ji. My question is both for fundamental and technical analysis, both for Mr. Tulsian and Shankar Sharma. You see, once this COVID has started, the most affected sector is travel and tourism. And as we know, the lot of expansion plan of all the airlines, everything put on hold. There is no near-term visibility for the airlines and the travel industry. But the stock market reactions exactly do not reflect what the Indigo is performing right now. Even last 4 days, as Tulsian ji was talking about, for the last 4 days, it has gone up 100 rupees. So on fundamental reason and on technical reasons, because this is the most affected industry, do you justify the valuation that SpiceJet and Indigo are trading right now?
देखिए ऐसा होता है कि if I come on your point of the valuation which we are see presently in the stock market, you are right in taking a call that hospitality and travel industry has taken a hit, but I would add the maybe travel and tourism, maybe multiplexes. Now, just to give an example, I don't want to name the company here, which I've said, on the television also many times, that if you have the fixed cost of any company more than 2x of the PBT, what they are reporting. Now, if I just give an example, PVR, which is a multiplex having 800 screen in India, they have the fixed cost 6x of their PBT on a quarterly basis, half yearly basis और yearly basis. अगर उनका PBT profit before tax 100 करोड़ है तो उनका fixed cost है 600 करोड़ रुपया. मेरे समझ में नहीं आता कि 2 महीने मल्टीप्लेक्सेस ऑलरेडी बंद है. 13 मार्च से मल्टीप्लेक्सेस बंद है, ऑलरेडी 2 महीना हो चुका है. और अगर मल्टीप्लेक्सेस खुलते भी है, even if they get opened, I don't think that people will really be going to watch it. And there will be all distancing sitting arrangement where the occupancy will be less than 33%. So how you will not going to raise the ticket prices. Same thing applies for the airlines also. But क्या होता है, as long as we see the prices of the share ruling high, ये जिस दिन 30-40-50% जब टूटता है suddenly in 3 days 4 days, then we wake up, अरे यार ये तो दिखता ही था, this was known कि ये company affected है. तो my point is कि अगर आप एक fundamental analysis ले रहे हैं तो don't allow your analysis to get reflected into the share price of that particular company. You go by your conviction. अगर आपके पास airlines के, multiplexes के या hospitality के, travel tourism के या hotel के अगर share है तो आप definitely उनसे निकलिए. आप ये मत देखिए price तो टिका हुआ है उसके बाद में price ऊपर गया. जैसे मैंने बताया कई technical factors, मैं यहाँ पे कारण नहीं देना चाहूंगा कि कई टेक्निकल फैक्टर्स के कारण भी शेयर का भाव ऊंचा चलता है. बट यू गो बाय योर कन्विक्शन. यू आर 100% राइट इन टेकिंग दैट कॉल दैट these industries, these sectors are not going to see revival at least for the next 3 to 6 months. And if you have your fixed costs, maybe in case of Indigo, the fixed costs are maybe 2.5x of PBT. In case of multiplexes, it is 5 to 6 times of PBT. In case of maybe jubilant food like a pizza stores and all that, it is 2.5 times to PBT. So अगर ऐसी सिचुएशन है तो आपको इन स्टॉक से डेफिनेटली निकलना चाहिए. बट एज लॉन्ग एज प्राइसेस रिमेन्स देयर, वी वेट फॉर द शेयर प्राइसेस टू फॉल. द वे आई हैव गिवन एग्जांपल ऑफ बजाज फाइनेंस, जब तक वो 5000 से 4000 नहीं आया, हमने सोचा कि कोई दिक्कत नहीं है तो ऐसे ही वापस बाउंस बैक करेगा, 4 से 3 है हमने कहा बाउंस बैक करेगा, 3 से 2 आया हमने कहा बाउंस बैक करेगा. So this is the thing which we did do a lot of mistake in taking a call, and we don't go by our own fundamental analysis and our own fundamental conviction. अगर आप अपने conviction अगर analysis में wrong हो भी गए, doesn't make any difference. The stock market is a game of making money and losing money. Analysis where you may go wrong.
Right. So now a couple of questions I'm posing from the chat box. The first one again is, for Mr. Tulsian. There's a question from Mr. Hari Modi. He says, what is your take on the insurance sector first? And second thing, do you think bottom has been made in Nifty? And where do you think it is going to go in the next 2 years?
देखिए, पहले तो मैंने आपको बताया कि निफ्टी में बॉटम, निफ्टी का लेवल लेने में कोई मीनिंग नहीं कि निफ्टी के क्या बॉटम होगा. टेक फॉर इंस्टेंस इन मंथ ऑफ मार्च वी हैव सीन द निफ्टी हिटिंग अ लो ऑफ closer to about 8,000. What have we done? Have we bought Nifty and made money? That is the job of a speculator or maybe an F&O trader, which I don't never advise. And as I've said in my introduction speech also, that I never give any credence, any importance to the निफ्टी लेवल. क्या हो जाएगा आज 9800 से निफ्टी अगर वापस 9000 आ जाएगी, क्या आप शेयर में पैसा बनाओगे? अगर आपने कोई XYZ शेयर परचेस किया, जैसे मैंने मल्टीप्लेक्स का उदाहरण दिया, अगर निफ्टी 9000 से फिर से 10000 जाए और अगर उस दौरान वो शेयर करेक्ट हो गए, तो इट इज नॉट गोइंग टू मेक यू एनी काइंड ऑफ गेन्स. नंबर 2. नंबर 3, इफ यू गो बाय द एक्सपेक्टेशन ऑफ द निफ्टी दैट we need to wait for the solution to the whole pandemic problem, this covid. अभी कोई कॉल ले सकेंगे कि इसके बाद में क्या होगा. तो ये सारी चीजों पे निफ्टी का 2 साल का कॉल कोई मीनिंगलेस है, और इस वक्त जो है निफ्टी पे कॉल स्पेसिफिक कॉल लेना चाहिए.
Right. Next question is from Mr. Shankar Sharma. So this is a question from Mr. Mahesh Shah. He says Asian prices of 1997 and subprime prices of 2008 cannot be compared with the present one. Even production, supplies, marketing, so on and so forth are disturbed in a big way. So please share your thought. And now good thought is generated among other things, including digital economy. So your take on these two issues.
So you're absolutely right. This particular crisis, in my view, is probably 10x, if not 100x of 2008, and definitely 1000x of 97, 98. मैंने एक article लिखा था Economic Times में March 1st week में, when there was still speculation that this was just a flu, or by the time summer comes it will go away. इस तरह की theories थी, आप लोग बात नहीं करते हैं, but that time there was a lot of this kind. I have no clue whether summer will help or not, but article we wrote was that, and as I mentioned, I was in the US several times in 2008, meeting with clients, hedge funds, big money managers, etc. And one particular hedge fund manager in New York City told me, "Yeah, there is no bear market. It's a bakwas hai." I said, "Why?" The Dow is down, 50% already. It was, I think, around the Lehman, September, October. He said, "You come outside, see the bars, okay? See everything. You will not find a single bar that is empty. You will not find a single hotel that is empty." And then, true enough, everything was full. Uske baad I went to San Francisco. The whole flight was full. First class was full. Business was full. Economy was full. San Francisco was like, there's no bear market. I went to Minneapolis, it's completely full. So if you compare that, and that's what told me, maybe just a technical problem of financials. If you fix finance, I think you'll be okay. That was what the gut feel came out after seeing all this. This time, the scale of damage is unprecedented. I mean, zero revenue. When have you ever heard? Ever? For large companies. So, giving any visibility to this, like as I said, at the best of times, nobody has visibility beyond 12 months. Markets anyway don't go for 4 quarters out. Uske upar market value nahi deta kisi cheez. So stick to what is reasonably visible. Reasonably visible is that we need to be at this stage sticking to names of comfort where there is no debt. So that is a simple mantra we have. We are sticking to that philosophy. If that means that some stocks will rally, like beaten down financial, that will happen. That's fine. I have no problem with that. I don't have to be in every place where there is a rally. First and foremost, ये philosophy समझ लीजिए. मार्केट में हजारों चीजें चलती है, मुझे सिर्फ उसमें 40 ही पकड़ने हैं. तो मुझे कोई दिक्कत नहीं है कि XYZ बैंक has doubled and all that. मेरे को कोई इंटरेस्ट नहीं हो सकती खेलने में. because those risks are far outweighing the rewards. Even if the rewards are 100%, it is a risk of going to zero, as we have seen Yes Bank go to nearly zero. वो सब नहीं करना है लोगों के पैसे के साथ. For that matter, आप खुद के पैसे. So that is the long and short of it. I think there is still a lot of pain left in the system, and the rally that we saw in India was also based on एक तो global rally था. Second was also the hope that the lockdown will get lifted, at least get vastly relaxed. It has been relaxed, but definitely not in the main center. So now that hope has been dashed, it's another 2 weeks. We don't even know after 2 weeks kya hota hai. So I think the markets will start to reflect that from Monday itself. So stay safe in every way from your health and your wealth. That is at least our advice.
Right. Shankar sir, continuing with you once again, this is a question from Rajesh from Bombay and Aditya. They are one the same. So I'm reading it out to you. The question says, our emotions are pushing us towards nationalism. Our emotions are pushing us towards nationalism, while you are suggesting to be global in seeking opportunities. There is a general perception about India being the place of opportunities. How do you balance these conflicting thoughts? And also, does it make sense to invest in global stocks considering USD vis-a-vis INR?
I don't see what is the question of nationalism versus investing here.
Let me unmute him. I think. Yeah, Rajesh bhai, you are unmuted. You can.
No, I'm.
Okay.
I could answer the question, right?
Yeah, sure. Please, sir, go ahead.
Yeah. So there is no question of.
Shankar bhai, can you?
Yes, I've heard the question. I'm just giving it. So please don't please don't confuse nationalism with investing. Investing is about being neutral. Cut out everything. As I said, agar Bhagwan ki bhi company kyun na ho, you still need to apply all the tests to that. You cannot assume that this is an article of faith. So nationalism is your call, or whoever wants to go and join the Indian Army, please go and do that. But investing has to work only on the basis of data and numbers, not emotion. And India is the land of opportunities, all well and fine. It is not a 0 or 100 situation. Just like, as I said, even in a single company, I might find that this is the greatest company in the whole world. Will I put 100% in that company? No. I will put 5%. As Tulsian said, he'll put 10, 12%. That's okay. I don't have a problem with that. But will he put 100%? No way. You're stupid and idiotic if you put in such a large quantity into even God's own company. So India might be a land of opportunity. I have no problem with that. But there are many opportunities across the world, and why should I not, as an investor, exploit every legal method available to me to make money? That is the whole single line purpose of investing, is to make money. Baat khatam ho gaya.
All right.
Very well said. Very well said. Thank you.
Mr. Tulsian, the next question is for you from one Mr. Anand Bharadwaj Sharma. He says he's pretty concerned about the banking sector. He says the NPA levels, can it double from here? And then the capacity to repay and the moral hazard will be pretty high. So do you think will it hit the economy further? I mean, will it hit the economy hard?
Definitely. First, let me tell you that banking and financial stocks are seen to be most precarious, definitely. And that is the reason I said that I have pruned my allocation to 25%, at least from 45 to 50%. Now, let's understand that you cannot afford to have the no banking system, robust banking system prevalent. Even on the contrary, at the time of crisis, you will be requiring the robust banking system to banks to be prevalent more, and their importance will be recognized more. The case in points could be, these are just example, ICICI Bank. I'm not talking the smaller banks, like maybe if I need to choose out of about 18 PSU banks, I've only chosen one bank, SBI, which is by all means way ahead of all banks put together. They have the deposit base of 32 lakh crore, 44 crore accounts, vis-a-vis the second largest bank being HDFC Bank with a deposit of 10 to 12 lakh crore. So my point is that you need the robust banking system for revival of the economy. And in that case, the major flow of benefits will flow to these efficiently run by banks, and not the banks like maybe Yes Bank, which Shankar has just now mentioned, or maybe there are any, I don't want to name the second run bank, or maybe all PSU banks minus SBI. So banks, let's not take the extreme pessimist view that banking sectors will be worse affected. They will be affected, but the equal benefits will be going to the efficient ones. Take the case of HDFC Bank as a prudent policy. They take the case of Axis Bank. Even for Q4, they as a prudent policy have already made a provision of 3,000 crore rupees for COVID, which has taken care of what has happened in case of NCLT. We have seen the losses of 12 lakh crore, which got very well absorbed and taken care by all these banks. So my point is that I see opportunity in adversity. I don't see adversity in opportunity. So yes, if you are equally concerned for the banking and financial system, which I'm also along with you, but I will be looking for the efficient one, and there the allocation can be made with allocation to that sector having proven to bank to about 25%, because I cannot afford to have no banks and financials in my portfolio. Because if you go by the whatever may be the GDP, whether GDP will revive by a couple of percentage or by will come to 2%, 4%, 5%, on a relative basis, bank and financial always go 2x of the nominal GDP growth. So if the GDP growth nominal will be seen at 6%, worst case scenario, which was at 10-11% for FY20, then the banking at least will grow by 12 to 15%. So yes, I cannot afford to have no banking and financials in my portfolio, but I'm not. But I'm equally concerned on the banking financial sectors as well.
Sir, another question on the same sector from one Mr. Ashish Bubna. He says the P2P platform, the peer-to-peer platform, will it pose a big challenge to NBFCs such as Bajaj Finance?
See, again, in fact, NBFCs, all the NBFCs are having the same problem. And in fact, just to go by the financial analysis, the companies which are having more of the leveraging, if it is 3x, then that is seen manageable. But if it is 6x, then that is seen to be quite precarious things, number one. Number two, those who have been more into the credit card kind of things, like we have the pure credit card company, SBI card. But if you go by the Bajaj Finance, which we have been saying so, that they have co-branded the credit cards, plus the credit card customers have been given the credit line where the interest rate is seen to be very high, 36% to 48%. We are going to see the defaults coming in. Thirdly, in case of Bajaj Finance, since he has raised the topic specifically, the deposits have been accepted. And the way we have seen the run-on withdrawal of the deposits from the NBFCs, probably that may put the pressure on their liquidity position. ALM, asset liquidity matching, mismatch may happen. So on all the fronts, and as I said, that price to book, even now, the price to book is at 4.5 against HDFC Limited seen available at maybe price to book of 2.5, which has inherent unbooked huge lakhs of crores of profits not booked. So I will be more safe and sure by making investment in the quality instead of taking the call. And as I said, if you see the delivery selling pattern, every week, every day, the delivery selling quantity is seen rising on Bajaj Finance. That means, which used to be about 10 lakhs shares per day on an average delivery about 1 month back, have risen to about 20 lakh shares maybe every day delivery about maybe a fortnight back, and now it has risen to about 30 lakh shares delivery every day. That means those HNIs, which I've said 45 HNIs are holding 2.5 lakh shares each, are seen to be exiting at some level, because these HNIs keep the level, यार 2500 के नीचे आएगा हम निकल जाएंगे, 3000 के नीचे आएगा निकल जाएंगे, 2000 के नीचे आएगा निकल जाएंगे. And they are seen definitely. One or two mutual funds have said on channel that they have exited from Bajaj Finance. So I'm quite worried that the exodus of the exit of the quality investors or the fund or large investors from this stock will keep the pressure on the stock price going.
Vikas, we have Vijay Chandak with us.
Okay,
Vijay,
please go.
question.
Yeah. Good afternoon, sir. I have put a query into chat box to Shankar sir. So the idea is that so many money, around 5, 6, 7 trillion money is being printed by the advanced countries, and in the prevailing scenario of zero to negative interest rates, do you foresee that Indian government will definitely try to work out some kind of the modalities so that a larger amount of money can be grabbed by our country by way of a equity contribution, by the liberalized FDI policy and so on, because of the reason that because we have got very limited means to raise resources to meet our shortfall, and we don't have an option to print money as the advanced country has done. So seek your view on this.
Yeah, I totally agree. I mean, if the status of if the cost of money is at what it is, and I don't see it rising anytime soon, the world cannot afford higher rates at all. इस वीक में कम से कम मैं 12 महीने 16 महीने 18 महीने कभी ले सकता हूँ. I don't see rates rising because with this kind of demand destruction, inflation itself is not a problem worldwide. So there is no reason to raise rates at all. I think this, and why only now? I have said this publicly from the time trade war started, that this is a golden opportunity for India to bring back the bus or the train which we missed in terms of manufacturing. If I were running this country, I would be doing nothing but last 2 साल से मैं road show पे road show करता, country by country, city by city, छोटे छोटे शहरों में जाता, जर्मनी के, यूरोप के, यूएसए के, जहां पर छोटी छोटी कंपनियां अपने आउटसोर्स करती हैं प्रोडक्शन टू चाइना, एंड वो चाइनीज कंपनी डालती है बांग्लादेश में या वियतनाम में और मलेशिया में, थाईलैंड में। मैं चाहता सबके पास कहता साहब ये छोटी कंट्रीज है, इनमें उतनी एब्जॉर्प्शन कैपेसिटी नहीं है, कम टू इंडिया, here is my personal email, this is the email of my team, send me a message, I will receive you at the airport, personally. I would have blanketed CNBC channel in the US. I would have put ads in Wall Street Journal to come to India, India open business. यार आपके पास God knows 40, 50, $100 billion आ जाएंगे। करना पड़ेगा मार्केटिंग, बिना मार्केटिंग के दुनिया आपको कुछ नहीं देती। एक इंडिया को एक नेचुरल FDI आता है, बिल्कुल स्टार्टिंग का हिस्सा इज द लार्ज साइज कंट्री, बट वो नेचुरल को ट्रेंड को ब्रेक करना पड़ेगा ना। अब आपको go out there, market hard, forget about all other marketing, just do this marketing for the next 24 months. This is what is needed right now. You're right. World is awash in liquidity. Let us capture that. But capturing के लिए आप घर पे बैठे रहोगे तो कोई capturing नहीं होता. Even the best product in the world has to be sold. It has to be marketed. आप CNBC इंडिया देखो साहब, आपको आपने देखा होगा अफ्रीकन कंट्री एडवर्टाइज करती है, देखा है आपने? गेबॉन करके कंट्री है, वो एडवर्टाइज करती है CNBC इंडिया में, that come to गेबॉन। आप सोचो, why are we not doing that? So you're right, we can capture a huge amount of liquidity, but for that we need to work hard, go and do some marketing. So let us start doing that as a country.
Sir, continuing with this, there's a very important observation. It is for you, Mr. Sharma. The way developed economies are providing stimulus and printing money, don't you foresee a crisis in making in terms of debt to GDP? Then why should one invest in developed economies which are going to sleepwalk in a crisis when their balance sheet has a huge debt? So this was pertinent to what Vijay just asked, so I pose this question.
Oh, no, don't worry about that. Okay, so understand this. Okay, so America's debt to GDP, even after all the stimulus, etc., will, I mean, effect vary, but might be 100%, might be 110%. So it's definitely not. And remember, its debt is in its own currency, so it's not foreign currency debt at all. And America is America. उनके लिए rules दुनिया के different हैं. If there is one country that will win in any scenario of the world that happens, it will be America. Second country that will win will be China. These two countries are of a different league and different order. इसको आप इन दोनों देशों को आप, I'm not saying China is same as America. It is still like maybe 10 places below America, but बाकी countries 100 places below these two countries. And number 1 point. Number 2 point, India's debt to GDP the last 5 years has gone from 66%. I think I checked the data. It varies, but 78 to 80%. For a poor country, a debt to GDP of 90% means it is pretty much game over. For a rich country with access to finance and low cost finance, 110% also does not matter. So understand this, rich people, rich human beings have better abilities to deal with problems than poor people do. It's the same thing for individuals, same thing for a company. Rich companies get financing very quickly. Equity QIP करना आज के मार्केट में 10,000 करोड़ मिल जाएगा अच्छी कंपनी को। पूरी कंपनी को, पूरी क्या छोटी कंपनी को 5 करोड़ रुपया नहीं मिलेगा साहब, ना बैंक से ना equity market से. It's the same thing for countries also. That stronger countries with more FX reserves or their debt itself is in their own currency, they have access to financing, so they don't fall in the same category as a country like India or a country like South Africa falls. So don't get the debt to GDP is a ratio, but that ratio applies more to the poorer nations than to the richer nations.
Right. So this question is from Mr. Tulsian, and in fact 2 or 3 participants have raised the same thing. So I'm just reading it out to you. This is Ravish Bang and Narayan Bhaiti. And one Mr. Parimal Saif from Mumbai. These 3 more or less the same type of question. Their question is, what are the sectors that you foresee will be the early movers post-COVID or post once the economy settles? Second thing is your take on the consumer stocks such as ITC or Imani. And third is investing into equity you mentioned. So such mutual funds, you have a 50% call on equity and 50% direct strategy in stocks. So what would be the best combine of this question, sir?
See, I have already said in my presentation that 3 preferred sectors will be in the same order. First will be FMCG, second will be banking and finance, and third will be IT. Because no doubt that it's difficult to take a call, but I can say that all 3, because as Shankar has said that the whole world is not seen having got affected. So IT will be probably, though we are seeing the all negative news flows that Wipro has made so many employees to having laid off and all sort of things. But my preference lies on these three sectors in the same order: FMCG, banking, finance, and IT, and then followed by pharma sectors, and then thereafter automobile. So maybe 25% in three each, and then 10% in other two if you wish to. And you can always rejig the allocation by 5% plus and minus here and there, but not exceeding beyond 25%. Coming specifically on Imami and ITC, I don't think that I will be able to take a positive call on both, because ITC being a sin product, and in fact the way the health, I have never in my whole life, I have never invested in the sin stocks. That may be my own problem, but I have never invested in the ITC in spite of finding it to be investment worthy in the past. In fact, I recall about 30 years back, I was holding shares of ITC Bhadrachalam, and the moment they announced its merger with ITC, I immediately went and sold my shares of ITC Bhadrachalam. So maybe for my own individual reason, I don't advise in products, and I don't, though again, if you ask me, probably ITC is ruling at a P multiple of 12, 13, which is seen to be just peanut or maybe just bizarre for an FMCG company, which have a benchmark EPA PE of about 25 to 50 or 55. Coming on the specifically on ITC Imami, so I'm having my neutral view. Now, third question which he has asked is 50% he is investing in mutual fund and 50% directly in equity. Now, as I've said, that being a chartered accountant, if you are professional and if you can give on an average about 1 hour a day or maybe 4 or 5 hours in a week, it is always better to go with the direct investments, because you will gain your knowledge plus you will get the satisfaction. It is like a 50% आपने mutual fund में invest किया, so I call them against that may be my philosophy, because I can only stand by my philosophy. It is like earning the rental income and the bhade, it is like, earning the bhade ka income and vyaj ka income. You may again, remain very wealthy, you may survive very well, you may remain very rich by earning by earning this bhade ka income and vyaj ka income. But I don't think that is seen to be the right way. So it is the satisfaction, and at least even if you have lost money, you will feel that, oh, I have lost money. And what have been done by the mutual fund, more especially after seeing the way they have handled the debt mutual fund, my respect of the fund managers have really gone down to considerably. So I will advise that if you can go with your own money, in spite of we running PMS, in spite of we running this one, I advise everyone that if you can invest of your own, it is better, that you will be having the satisfaction. But if you are incapable, no harm in going with the 50% mutual fund and 50% direct equity investment.
Right, sir. Shankar sir, your take on telecom and media, please. There was a question from the floor.
So, as I was mentioning just about 10-20 minutes back, that globally we found many companies that would benefit from the whole digital move because of work from home and lack of travel, so conferencing, etc., and Zoom being one of them. We made 100% in the last 3 months or so, and there are other companies where again, company called doing distance medical services, which is again doubled in this year from January till now itself. It's doubled from $80 to $160. So we found many places there in India. Unfortunately, these kinds of places are not available. So we have to make do with what is available, and what is available are basically a couple of telecom companies, of which there is one pure play telecom company, and we like it. So I think that is a big beneficiary of the consolidation, which was anyway happening prior to the COVID itself. The vast industry has been decimated. So you're left with basically 2.25 companies, of which one is a pure play telecom company, and we like it. So the answer to the question, we definitely like that as a sector and as a play.
Thank you, sir. So I guess now it is time for me to pass on the baton to the president. We've had a wonderful interaction. Thank you both, Mr. Tulsian and Mr. Sharma. It's over to you, President.
Thank you, Vikas Bhaiya, for wonderfully moderating the question answer session. I would say definitely one sentence or rather one statement from Shankar Sharma sir, that he would not invest even in the God's own company. I mean, this is a very bold statement I have ever heard. Yes, but it's very true. And yes, SP Tulsian sir, you have spoken your heart out, and you have answered every question then with true to the spirit of today's scenario. With this, I would request, before I request Kamal Nanjan, our past president, to offer a formal vote of thanks, to both our revered speaker. Shankar sir, I just came to know that you are a very good singer. So this is not a question, but a request that you can end with a few lines from Muhammad Rafi.
Sure, sir. This was my call as well. Sorry, I didn't say.
तो क्या मैं गाना गाऊं? अब ये सब करवाएंगे क्या?
सर दो लाइन
फर्स्ट लेट मी आंसर मैं भगवान की कंपनी में 100% नहीं डालूंगा, क्योंकि ऐसा तो नहीं कि भगवान से गलतियां नहीं होती ना। अगर इतना ही होता सर, इतना ही होता तो ये लाखों बेचारे लोग क्यों मर रहे होते? बेकसूर लोग, उनका कोई गुनाह नहीं है, इस तरह से मर रहे होते। इतने बड़ा क्राइसिस होगी दुनिया में। अगर भगवान एक्चुअली होते तो आप मुझसे सवाल पूछते ऐसा नहीं कि गॉड मींस ही कैन नॉट मेक मिस्टेक्स सर। तो मैं तो राइट, तो इतना 100% फेथ कोई चीज में नहीं रखना चाहिए।
राइट।
हम इंतजार करेंगे, हम इंतजार करेंगे तेरा कयामत तक, खुदा करे कि कयामत हो और तू आए, खुदा करे कि कयामत हो और तू आए, हम इंतजार करेंगे।
थैंक यू सर, इट वाज वंडरफुल। डेफिनेटली सर, ठीक है, हम लोग यहाँ पे इन्वेस्टमेंट के बारे में बात करने आए हैं, बट सीइंग शंकर सर सिंगिंग लाइक दिस, डेफिनेटली इट विल लिफ्ट ऑल आवर स्पिरिट। सो कमल
sir, एक second. Tulsian sir, would you like to say a couplet as well on party lines?
Shankar, I think you have a very good throat, and I'm happy that you have the alternatives available apart from the
वही करने का अब वही बुलाने वाला है जल्दी बॉस।
नहीं, I don't say that, but you can win the hearts doing that. You can win the hearts, not the wealth, but you can win the hearts.
Yes, Kamal, we are over to you for the final vote of thanks to our.
Thank you. I request you to unmute all.
Yes, but it will be very disturbing.
Clapping. Managers and executives, hearty SP Tulsian, who wonderfully with his fundamental analysis and chartered accountant COVID situation. Just all to big round of clap.
Yeah, Kamal Bhaiya, please unmute yourself. Actually, it was not clear. Please unmute yourself and then you can speak. Please.
I have to repeat or I am getting.
Yeah, please continue, please.
So Mr. Tulsian part was over, or it was I have to repeat?
No, I think you must repeat actually when it was not audible. Yes, please.
Yeah. Okay. Sorry for the inconvenience. I, on behalf of the Association of Corporate Advisors and Executives, extend hearty vote of thanks to Sri SP Tulsian, who wonderfully did this. Rather, I should fundamental analysis of the market and in this COVID situation, how an investor should take care of the market. At the same time, he motivated we chartered accountants to do our own analysis to remain invested. I request all to clap for Mr. Tulsian. I also extend hearty vote of thanks to Mr. Shankar Sharma, whom I would say that he has done realistic analysis in the present situation. And one thing I must say from two mandis that he has quoted, that if the process of rebuild of the economy will start from the rural India or non-urban India. Sir, the way you analyze the market, we all feel with confident that we'll reposition ourselves in the given circumstances globally. I request all of the participants to extend hearty vote of thanks and give a round of applause to Mr. Shankar Sharma. And I also thank all the participants who I think here are 315 numbers who witness this program, and I don't know about the numbers on Facebook to making this program necessarily successful. Thank you everyone.
Thank you.
Thank you.
Thank you, sir. Thank you, Shankar sir. Thank you, Tulsian sir. I mean, we would definitely want you to host in more of our session in the future. So thanks again.
Thank you.
We'll be connecting both of you. Thank you, sir.
Thank you, sir.